A warm welcome to one and all for the second day of the advanced price action trading module, which is a part of i3T3 mega webinar. We are in the 10th session of the complete price action series. So friends, so far we have learned three very useful power patterns. The first one being a flag limit, which is a continuation pattern with a single engulf. The second one being an FTR, which is again a continuation pattern with double engulf. And the third one being a cap, which is a reversal pattern with a single engulf of an authentic zone. All right. Now, let us discuss and understand what can happen if any of these patterns fail. Every trade can hit a stop loss, right? So we don't believe in 80%, 90% win rate. We always say even with a 30% win rate, we can make a respectable income. Okay. Let's deep dive into this interesting power pattern called swap. Disclaimer, friends. Great. Let's move on. Let's swap it. Okay, friends, what do you mean by swap? What do you understand by the term swap? Vidya says interchange, Amit says reverse, Prakash says exchange, Dinka says it's just a change. Okay, sounds good. Friends, we all know we can trade power patterns like FL, FTR and caps. We clearly know them. We clearly differentiate between them. We clearly understand where to look for such patterns. Why we trade them? We trade them because we strongly believe that they are the places where a good amount of pending orders would exist. Okay. Now, what if a demand zone is brutally broken due to bad news? We all know the last 2 months of bloodbath in the stock markets. The moment the corona pandemic broke out across the world, the markets tanked big time. Nobody expected that fall. How many of you think that this confusion, this shocker, this tsunami is something which is going to happen in 2022? See, after that we did postmortem. We told there was a Spanish flu in 1920, so in 2020 it has come. That is fine. Okay, now Amit is telling Ashok PE was very high. So I have been telling that any Nifty PE of 28 and above is dangerous. That is fine. But did I ever tell you when this market will fall? I knew market will fall. I definitely knew market will fall because way back in 2019 mid itself, I declared these markets are currently at very dangerous levels. Okay, so we knew this is a very heated valuation, it has to fall, but we never knew when it will fall. None of us knew when it will fall, and none of us knew that it will fall to this extent. Now, friends, think about it. What is a demand zone? What is a power pattern? A power pattern is a place where the zone is extremely strong. That zone is not just a damn zone. It's not like a rally based rally, drop based drop, rally based drop, or a drop based rally. It's not just a price structure. It is a power pattern, and we strongly believe that is a point of very high strength because we know that there are good amount of pending orders. Now, does it ideally mean that that zone is extremely strong and that is why we want to trade? We always believed in one thing: wherever there is a barrier, when someone breaks that barrier, we consider him a strong person. It can be an SR line, it can be a authentic zone. Now that strong person is whom we treat as power pattern. Now Friends, don't you think if such a person is instantly killed in the flash of a moment, don't you think all the traders there are confused? Don't you think they'll be in a state of absolute panic? It will be a super chaos. Okay? At that moment, at that confusion, you will see a swap. Now, what happens generally? Let me draw something interesting for every one of you to give you a perspective. Okay. Now let us say this is one zone where we are trying to trade. Beautiful departure. Okay. From this point, price comes. Boom. Is this a good example? This is your flag limit, friends. Correct? Your stop loss is hit. Now, at this point, you are waiting to take a long trade. This is plan. This is actual. Now, what happened? This entire zone, okay, where there are pending orders, if it is instantly broken, I'll give you a mathematical analogy that would be much better. Let's say there are 5,000 orders here, and here 25,000 orders is pushed. Now, when it comes here, how many orders get filled? 5,000 orders would be instantly filled. Only after those 5,000 orders are filled, the price will break through the zone. Correct? Everyone agree? Yes? Everyone agree that once this 25,000 orders chases that level, the 5,000 orders which are there will instantly get consumed, and then the zone gets broken. Now, don't you think a good amount of orders would be available here in the opposite direction? When price moves down, how many orders will get unfilled? Theoretically 20, but practically it will not be 20 because it's a massive market order. It's not a limit order. Okay, it's not a limit order, it's a massive market order there. Okay, but do you guys understand it is at that location maximum liquidity exists? Number two, do you guys understand this sudden choke confused all the traders? Strength, I look forward for a short trade. I wanted to play a long trade. Okay, I wanted to play a long trade, but actually it became a stop loss hit. After the stop loss hit, if the zone is stronger, I will look forward for an opposite trade. And by doing this opposite trade, most of the times I can recover my money. I can recover my whatever loss that I incurred during the trade. Okay. Now there's an interesting question by Ram. Ram is telling, Ashok, this looks like looks like resistance becoming support and support becoming resistance. Friends, one key point is this is an SR flip. Correct? What is SR flip? SR flip is nothing but the flip of the SR line. Correct? What is this? This is the flip of the power pattern, not just an SR line. Clear? Okay. Now, can I say every swap is an SR flip, but every SR flip is not a swap? I repeat, can I say every swap is a SR flip, but every SR flip is not a swap? Okay, perfect. Thank you. So let me move on. Generally, these zones are places of strong reactions in opposite direction. That is what we discussed right now. Because that zone is now ruled by sellers and no longer buyers. Okay. Now let's discuss how swap works. Let's say this is a power pattern demand zone. That is your proximal line. This is your distal line. Now when price comes to that level, I want to take a long trade. Suddenly some bad news came. COVID effect, RBI regulations, policy updates, okay, unemployment rate, monsoon delays, pandemics, negative quarterly results. There are so many factors. And suddenly what happens? The price dips through the pattern. It flashes like a tsunami. It just happened. It is at that point of time, it creates more confusion. When more confusion is created, more panic happens in the market. Retailers particularly panic big time. When they panic more, they do more mistakes. When they do more mistakes, they do more trades. When they trade more, they create more liquidity. When they create more liquidity, they lose more money. Clear, friends? Whenever this tsunami strikes, there is panic. The panic creates a situation where you make mistakes. When you make mistakes, you take wrong trades. When you take wrong trades, you add up to liquidity, and finally you lose money. It is at this time a swap is happened, which means the demand zone acts as a supply zone, and I will go to the source of engulf to take the trade. Now the proximal and distal line has to rotate, is it not? So I'm no longer looking for a long trade. I would rather go short, because there is one guy who came and destroyed my power pattern zone. So when price goes to that point, I took a short trade, and therefore I got my reaction. Is it sensible? Okay, let me do this. Let's see how a flag limit swap will show up. There is an SR line. What kind of a flag limit is this? Case 1, 2, 3. This is flag limit case 1. Thank you. So that is my zone. So I look forward for a long trade there. When price comes to the top side of the rectangle, I will take long, and my stop loss is at the bottom. And suddenly the price fell. The price elegantly passed through the zone, which means very clearly the zone is already strong. Remember, it's not a weak zone, it's a strong zone. So the moment somebody comes and breaks such a strong zone elegantly in a very casual manner, that means that guy has to be strongest or super strongest. And the demand zone is no longer valid. I will go to the source of engulf and mark the swap supply zone. Which is the source of engulf? How to identify the source of engulf? There was a rule, a very simple rule. What did we say? Locate the candle which engulfs. From there, go reverse. Stop wherever there is a zone. So this is where the zone is. So this is my source of engulf. Where is my origin of engulf? My origin of engulf is this. This is my official OOE. This is my official SOE. This is what we learned yesterday. Okay. Now that is my swap supply zone. Okay. And whenever price comes back to that zone, I look forward for a trade. Okay, some interesting questions. Vikram asked, sir, why not wait at OE? Because the OE and SOE would be officially very, very far. Very far. So somebody is asking, how different is it from a cap? Okay, that is something which we need to draw. Friends, what is this? It's a flag limit. What is this? It's an authentic zone. If I make it slightly up and down, it can even look like an FTR. That is fine. So this is a cap. Why this is a cap? Because authentic zone is engulfed. Now what I will do, now tell me where should I trade? So according to the theory, I need to go back and trade from here. This is a swap trade. This is your flag limit. This is my cap level. Now friends, let me draw another beautiful story for you. Now tell me friends, what is this? It's a flag limit. What is this? That is also a flag limit. And what is this? It's a cap. Why? A cap can be formed not just by breaking an authentic zone, it can even break a power pattern and become a cap. Ultimately, what we are looking for, we are looking forward if to check if this guy, this reversal guy is a strong guy. Since he came and broke this particular flag limit zone, he's a star. Can it be called authentic zone? No. How can you call? Because if this SR line can be authentic, this I don't know. This cannot be authentic. Can you differentiate? Now let's go back. Here is a beautiful example of Ashok Leyland. Okay. What is this, friends? A good SR line. Touching the base, zoom ahead, price comes back into the zone, into the flag limit zone. It gave a very small reaction and broke it. Okay. Now what happened? After it broke, which candle engulfed? This guy. Correct? Who engulfed? This guy. Now go reverse, find the base. This is the source of engulf. This is the origin of engulf. So price goes back, picks the orders and comes down. Now Shivangi is asking, Ashok, can OE and SOE be same? Yes, possible. Why? Because see here price is coming like this, formed a base, come down, formed a base and come down. Instead of that, if it comes down like this becomes your OE and SOE. That's all. Is that fair? Now there's a question by Sendil. He says, Ashok, can we expect same target 1:3? Throughout our journey, we should only target minimum 1:3. Wherever we have to go to 1:5 and 1:10, I'll inform you. Till that time, it is always 1:3. Now, Vicky asks, Ashok, are swaps applicable for FTR? They are applicable for everybody. Okay, so there's one question, sir, if it goes again to OE, the origin of engulf, should I take a trade? If that zone is supporting you, take the trade, or else fine. Okay, now please understand this point. See, exactly, to be honest, this is drop, this is also, this is officially a base only. Okay, so I mark this as the top and this as the entry. Let me show you another interesting example. This is an SR line. Friends, what kind of a scenario is this? It is flag limit type 2. Okay, flag limit case 2. Yeah. So now what happened? Price came. Okay, it formed a base, and finally this guy engulfed. Who engulfed? Who engulfed the zone? This candle. Go reverse, mark the first zone. This is the first zone. Drop base drop. I got my reaction. Is this clear how we mark the zone, friends? The moment a power pattern is broken, you need to identify the candle which is engulfing the power pattern, go reverse, stop at the first zone, and that zone is your source of engulf, and that is where you need to take a swap trade, because that is where the orders are hidden. Where is SOE? Go to the top. See, for this one, this is your origin of engulf. This is your source of engulf. Okay, that is very smart. Sujit says, Ashok, there is LOL. Agreed. Okay, and Sendil makes an interesting statement. Ashok, if you say swap is superior to power pattern, what if that swap is broken? The another swap we will also trade. Again, that is case by case. We need to see how it breaks. So now let me draw something. This price came here, reacted, 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 finally broke. Is this a swap to trade? No. Tested many times. Why? Why do you say that this is not trade? Any logical reasoning? The, the story is simple, because after frequent testing, all the pending orders are eaten up. So naturally it will fall. Okay, do you understand the difference between a swap scenario and this scenario? A swap scenario creates panic. There is no panic here. The trader is very happy. He's like happily trading. There is no panic button. Clear? Now look at this scenario. This is an SR line. Price exactly touches the base and boomed. What kind of a pattern is this? Flag limit type 1. Okay, very good. Now price went up. Price went up. Okay, and who engulfed? Actually, this is the guy who engulfed. This candle is the one who engulfed. Can you tell me why? Because the first red candle, it just closed little above the zone. Next guy was a gap down, he closed it within the zone. This is the only guy who closed out of the zone. In cases like this, the best place to trade is the source of engulf. Okay, you can trade here also. That is one thing. Now many traders, what they do, they think this is engulf, they treat this as engulf and then take this as a reversal entry. But let's always play the source of engulf theory. It is much easier and comfortable to locate a zone. Some people take this zone as the marking point, the complete zone. This is the official zone of marking, no? So it takes the reverse trade. So in our case, we will stick to engulf completely. Now let us see how FTR swap happens. Minor SR, the minor SR became a major SR. H1 engulfed, H2 formed, base formation, H2 engulf. What is this, friends? It is an FTR. Okay, now that's the FTR demand zone and I look forward for a trade. I want a long entry at the proximal line with my stop loss a little away from the distal line. Now what happened? COVID news came. So what will happen? Market will tank. That is the break of the zone. So when this fall come, you think all the sellers got their order filling? The answer is no. Now what happened? The zone will behave like a supply zone instead of a demand zone. We call it a swap supply zone. So that's the distal line, that's the proximal line. So when price comes back into the zone, it will react. This is the anatomy of a FTR swap. A brilliant question comes from Manish. Ashok, if FTB worked for FTR and FT2TB, it creates a momentum candle and break it, can you call it as an FTR swap? Sir, park that question. We will talk very soon. Two weeks back, If someone had written this, okay, you will not know you are supposed to take a swap here. But this whole conversation is telling you a story. There is a high here, there is a high here, there is a base here, there is an FTR zone, the FTR zone is created, the FTR is engulfed, and after the FTR is engulfed, I want to take a trade, entry here, stop loss here, and target here. Okay. Now, Narsimha is asking, Ashok, where should I take the trade? Is it at swap supply zone or SOE? If SOE is very, very far, you can consider swap supply zone, or you can play at the SOE. Now look at this example. This answers your question. H1, significant SR, broken, H2 formed, base formed, price boomed. Now, this is a FTR demand zone. Now, did this trade work or not, friends? Observe carefully. The trade worked. Exactly. It's a kiss trade. Very good. Thank you. Okay, everyone agreed? Now let me draw something for you now. Can I take this as an SR? What is this? Theoretically, it's a gap candle. Theoretically, it's a gap candle. But the biggest problem is this one. What candle is this, friends? Is that a momentum candle? Okay, it's a ERC base. So that is why you are not considering that flag limit. Is that clear? Since it's an ERC base, you are not going to trade that flag limit. If it was a good momentum candle, you would have happily traded. Okay. Okay. This FTR demand zone successfully worked. Don't be confused, Akbar. See, here is the entry. The price closed here. So it gave 1, 2, 3, almost 4, 1:4, 1:5 RR. Now, so that is one reason. That is one reason why we do not take that as a flag limit. I thought somebody will locate it. Okay. Now what happened is, see now, if you take this whole scenario, reversal, this is, see, there is one base here. Near this region, there is one base. It is actually synchronizing with that point. If you mark like this, we will be beaten. It will cheat us. The swap has cheated us. But if you take the full zone there, there also there is a bit of cheating. Okay, but this particular long base ERC is telling there is abnormal manipulations. So which will give clear instruction to us to stay away. Okay, now there's a question, Ashok, we should not trade ERC candles, right? How is FTR correct? FTR is correct because this candle is a live candle. This is your entry, sir. In a real time, on the day of this candle price, when the price comes here, this is entry, this is stop loss. The price did not hit stop loss, the FTR worked. Okay, this is not a great swap, agree. Understood? FTR is perfect. Apart from that, then it is a painful task because it's a long ERC. So which ideally means this flag limit is also unsafe, and any trade here is unsafe because of this huge wick. Okay, look at this example. Okay, look at this example. Okay, H1, H2. Okay, this is the base. Drop, base, rally. All right, price went up, comes down, it gave a very small reaction. This is the FTB, and then it broke. Yes, yes, Urjil. Okay, and then once it broke, then the price gave an entry. Sendil says this looks like compression. Sendil, are you talking about these things? This is a zone. 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 Yes, Sendil. This whole region is compressed. Absolutely correct. Okay, but in the entire journey, this is the only zone which is fresh. You get that, Sendil? Now, after this zone is broken, the zone gets tested and it shows reaction. Now, there are many swaps which are good, many swaps which are bad. So which is a very good swap to trade? We must understand that point. So I'll show you that example. Now look at this scenario. This is a classic example. Okay. So this is the zone of action. Price came into the zone. FTB. And then broke it. Look at this guy. The source of engulf is this. Friends, everyone connect with me. The source of engulf is this. Okay, but price reacted here only, at the same zone only, at the swap zone only. SOE also worked partially because of level over level, or else it would have been okay. So Kiran says, Ashok, what's the difference between cap and swap? A cap is an engulf of an authentic zone. Swap is an engulf of a FTR, flag limit, and a cap. Swap is exactly opposite to all the three power patterns. Let me show you an example of that. Okay. Now look at this. A significant HR H1, H2. Okay. Now, if you look at it carefully, this is the candle which engulfs the demand zone. Correct? Now, if you mark the same rectangle, the swap extension, this is the entry. Or else you can wait for the origin of engulf also. At the origin of engulf, there is a level over level. So stop loss should be somewhere here. Okay, that is an FTR which is engulfed. Everyone get that? Somebody is asking, why don't you call this one as origin of engulf? Because that's the part of other trend. See, when you look back, see this is the swing, this is another swing. So this is the origin of engulf of this swing. Ram, is that clear? Why we can't call this one as the origin of engulf? It is a part of a different swing. Is it not? It is clearly visible. All right. Now let us see how the cap work for swap. So where should we take an entry, at swap zone or SOE? It can be both. If they are very close to each other, look at SOE only. I'm sorry, look at the swap zone or SOE, whichever is nearby. If they are far away, you can play both levels. That is an authentic zone. Authentic zone is engulfed. That's a cap. Correct? Now we want to short there at the proximal line with stop loss at distal line. Some good news came. Boom. That becomes your swap supply, and we will go long. Now tell me, where is the source of engulf? Is this not the source of engulf? Think about it. 1 minute pause. It is the source of engulf. Clear? Any confusion in this? So either you can trade at the swap zone here, or you can trade at the source of engulf. Okay. Now look at this. This is a drop. This is a drop, base, rally, rally, base, drop, a gap down drop. It's brilliant. Okay. And this is an authentic zone. This is the guy who engulfed the authentic zone. Everyone clear? Now the source of engulf is this. The trade worked. The source of engulf reacted. Okay. Shivangi says it's not authentic zone. Let me draw a straight line, straight line, straight line, straight line. Yeah. There is a slight touch. Okay. I buy that. Okay. So we wanted to trade this cap. The price went up and broke it. Okay. Once that engulf happened, I come back and mark the source of engulf. Okay. See, in this case, the cap zone failed. Venkat, you are right. We have to first engulf the origin of engulf only, not source of engulf. Friends, one point, engulf of the SOE is no relation. Okay. We are only looking for the engulf of the origin of engulf. And I also agree with Shivangi, this is very, very close. This zone is slightly sandwiched with it. Okay. And then the reversal trade happens. So now whenever a trade fails, we have another perspective to watch, to look for the opposite side domination. That will give us an opportunity to verify and play around. And there's one interesting question, Ashok, what if swap also fails? We should stop. There's no end to it. There are scenarios where even the swap fails. Don't ever think swap is a non-losing attempt. No, even a swap fails. Swap is the best way to recover your cost, nothing else. Friends, I repeat, swap is a way to recover is in your cost. There is nothing like swap of a swap. Minus into plus is not minus all the time. Ultimately, the purpose of swap is to recover the loss that you made in a particular trade. That's all. And sometimes it happens very fast. You'll get the opposite trade very soon. You should be in a position to take it. And what is a good and the best swap? What is the difference between a good swap and a best swap? Can anybody think and tell me which swap is considered to be the best swap? Ankur says very quick. Vikram says when there is first attempt break. Manish, when there is no time to think. Which breaks a strong power pattern. Brilliant. Now let us watch it. SR line. What is this? Flag limit. Thank you. This is good. It reacted. And it had a massive break. Is that a swap? Yes. Where is the source of engulf? Since the candles are not clear, this is your source and origin of engulf both. Okay. Very nice. Now look at case 2. That is not an ordinary swap. That is a power swap. So what is the difference between a normal swap and a power swap, friends? Yeah. Okay. Whenever a power pattern fails instantly without a single FTB reaction, that is a power swap scenario. Okay. That is the theory and thought process. Correct. That's a good statement, Archana. So is that clear? The best swaps to always trade is power swaps. That is the best swap to trade. Which is a non-tradable swap. This swap is the non-tradable swap. Flag limit. This swap. So this is also swap. What is wrong in this? Exactly. Ankur says all orders are consumed. There are no pending orders. This is natural phenomenon. This is not some abnormality. This is not urgency. There is no panic. This is a normal price action behavior. Exactly. Such swaps can always fail. Yes. Brilliant. Okay. So I'm happy you were able to understand the essence of the thought process. It's not a tradable swap. Now look at this guy. This guy is Diwan Housing. Okay. This was a SR line. H1, H2. Okay, and he formed a base here. So what is this power pattern? This is an FTR. So what is this? How many times it is tested? Tell me, let me see. It has tested 4 times. 1, 2, 3, 4. Why 4 times? If I mark wick to wick, this is also tested. Okay, this is a normal price action phenomenon. But now let me tell you something. Now tell me. It is a swap, no doubt. The origin of engulf is around 590 levels, 600 levels. No worries. Divan housing will never come there. It will take decades to come. So the message here is to let you know if there are some abnormal such breaks, then also these guys will have a lot of weight, these zones. So what all did we learn in this session? Swap, which is the fourth power pattern in the advanced price action theory. So friends, never ever confuse swaps with SR flip. SR flip is just reversal of a SR line, not a zone, not even a zone. Okay, whereas swap is a flip of a power pattern zone. There's a lot of difference. So that is why we always say every swap is an SR flip, but every SR flip is not a swap. Okay, okay, but all SR flips are not swaps. Swaps can be taken at the failure of flag limit, FTR, cap, or QM, whichever you want. The swap can happen with only 2 types of price rejection: the good swap and the power swap. The power swap is the best swap. When it doesn't respect the power trade or power pattern and deeply breaking it, that would be phenomenal. With this, we come to the end of the conversation. We will take up Q&A. So Sujit Sudeep says, what is QM? QM is one of the most superior power patterns which has 4 engulf. We will talk about it next week. It is one of the most powerful and very useful power pattern. So Ramu is asking, Ashok, please discuss Divan housing chart. There's nothing to discuss in that chart. That is over. It is history today. It will take a lot of time to even touch 100. Apply the Gann power of 8 rules. You'll come to know. Okay. So any other question, friends? Okay, so Ramu is asking, just explain the chart once again. See, the point is, what I wanted to say is, this is a beautiful chart. Okay, this is a FTR zone which worked big time, and then it was engulfed. The engulf is so high that I can still trade this level, but unfortunately price will never come here. That was my pain point. Okay, price will never come here. Okay, even if all I'm telling is, in spite of the rule of our power swap, even if price comes back to this zone, it can be a phenomenal trade, is what I'm telling. Okay. So you need to search for many swaps. You need to keep changing charts and keep watching. Okay, I need to search. If I have to give you some more swaps, I will try to find some more swaps for you. But you also, you guys now look for some swaps and share it with me. Okay, Shivangi, I need to search for these swaps because it's not breakout, right? It is a break or failure of a power pattern, the recent power pattern. Friends, one update, look at this Adani. Yesterday I was watching this live chart. This is a beautiful flag limit level. Okay, and this whole thing is compression. So definitely this is going to give a proper response. See, that's an SR line, Pakka SR line. My only worry here is this level over level. Okay, apart from that, I don't see any trouble. Can you make out? How many of you? Okay, I was watching most of the charts and the recent times. I was marking some levels also in real time. Okay. In our review meeting, we will go deep inside that. Wow, that's a good question by Abhay. Is telling Ashok results day can be an identifier for swaps, good or bad? Yes, because many breaks will happen on such abnormal news only. Yes, bank, I don't know, man. Okay, in S bank, if you take this as an SR line, broken, formed a base, this is a beautiful level to trade an FT or supply short. Apart from that, I don't see anything interesting there. Okay, that is one break. This is the SR line which it broke. See, this is a tested FTR if you can make out. Okay, and then it reverses. This is not a swap. I cannot take this as a swap because of this. Because of 1, 2, third time it broke. Okay, third time it broke. So definitely this is not a swap. Okay, it is lucky it worked. That's it. Okay, let me look at Bank Nifty. Okay, intraday, shall we go 1 minute? I only love to trade, watch 1 minute in Bank Nifty. Friends, watch this level. Watch this level tomorrow morning. Let us watch it. There is a small level over level here. You never know, it can even act from there. Let's watch it. Okay. Anything on a higher time frame? Let's see 5-minute chart. Okay, I'll delete other drawings from this. I will draw a line. I always starts with an engulf, nothing more. This is also an FTR which worked. This is the base because there are two candles, no? Again tested, we cannot trade it, we need to wait. Any other fresh FTR? Let me check, which we can play tomorrow. This is not a significant SR line. Intraday 1 minute level over level is okay? No, not okay. Not at all okay. Level over level is the only thing which eat away all the stop losses. That is our enemy. That is our enemy. Okay, that is our enemy. So Shivangi is asking for some more couple of more trades. Shivangi, let me locate some power patterns which have failed and then mark it. Okay, I'll pick it up. I need to search. Keep jumping the charts. Okay. Friends, on a daily level now you get lot of amazing FTRs and flag limits right now because market has been seriously trending. Please watch Adani Ports. Okay, watch this flag limit in Adani Enterprises. There are some amazing levels which I found in the last week when I was watching all the charts. Okay, so now all of you make one chart. As usual, only one example. Try to make one chart. That's it. Nothing more. We just want one chart. Okay, now for homework for this week is you need to make 3 charts. One chart for FTR, one for cap, one for swap. Now think about it. You don't have to go search for a swap. How many of you get that? Go and find FTRs and caps and flag limits. Okay, whichever hits stop loss, that is a prospective swap, not a swap but a prospective swap. Yes, Sandeep. Sandeep, if you go to YouTube, I have posted one video, okay, in my channel, in which I traded 1 minute chart of Bank Nifty only. I am scared to trade 1 minute Nifty, which is dangerous because Nifty also doesn't have that much of liquidity. Okay, the volatility in 1 minute of Nifty is very high, but Bank Nifty 1 minute is very stable, very stable. The amount of order flow there is very high. I will just show you. Okay, if I take this Bank Nifty level and I go to charts. Where should I go? Mm, why volume is not coming here? Array. Nonsense. It's Viratak, right? Why it's not coming? Let me check Nifty. Volume is coming for Nifty, but why not for Bank Nifty? That is funny. Okay. No, it has to come. It has to come. The volume has to show up. Anyway. Okay, friends. Yes, Dinesh. That is correct. Which database I am in? Oh, I am in. I am. And friends, lot of queries are coming with respect to some auto execution algos and so on. See, those things we will address next month only. Okay, because my algo team is warming up. They are busy building the plugins and other things. It will take a little more time. Okay, we have at least 15-20 algo traders waiting for their strategy to be automated and go live. So we will take at least two months to clear all the backlogs, and then we will take off. Okay, because currently the team is only building the plugins, and it's taking a real time, and we have to associate it with couple of other vendors, not only Symphony FinTech. We are looking for other API vendors also, so that we will create competition and bring down the overall cost of ownership. We are also in talks with Amazon to host individual algos for each individual. In the sense, you can have your own private server where you have all your systems and tradings done, so that we don't do anything on our manual computer. Okay, so if by any chance we are not responding to your emails related to any algo related stuffs, kindly be aware that we recognize it and there is a delay, and we will respond in a month. By July onwards, once we all start from our new office, we will go big bang. We will start closely stitching all the missing connections and establishing a very foolproof system. Please do come. Whoever in Bangalore, of course, this Friday we are unable to invite you because there's a limit for 20 people. From next month onwards, anybody can happily walk in. You just have to call Pradeep or me or any of our staff. You can call our support line, and if you inform that I am coming to the office to meet Ashok, I'm an I3T3 guy, they will take care. Okay, the reception will take care of you. Okay, so let us start the session. Recording started. Good morning, friends. Welcome to the 11th session of the Precision Price Action Trading Program as a part of I3T3 Mega Webinar. This is one of the important aspect. This is not a power pattern, but this is a very powerful enabler as far as trading is concerned. This is called as the compression. Okay, one of the unique concepts, and it is the foundation for most of the traditional patterns working. How many of you have heard of all these patterns, like your wedges, ascending triangle, descending triangle? Why do they work? Have anyone thought about it? Why does cup and handle work? Come on, market is not silly and stupid that a cup shape comes, market will react. It can't be that silly. There has to be some logic behind it, no? How many of you thought about it? Everything there is a science behind. All right, so welcome to this session. We will deep dive each and every aspect in micro detail. All right. So let's talk about compression. Friends, what do you see in this picture? There is a spring, okay, and there are two hands pressing that spring. So what will happen if it is pressed? What will happen if it is pressed? Ram says pressure builds up. Gopi says it gets compressed. And how does the reaction to that compression would be? It will push back. It will bounce back. Raj says it will burst. Yes, that is the foundation of compression theory. Okay, that is the underlying foundation of compression theory. So what is compression? Friends, compression is a kind of price action which signifies there can be a reversal as it is compressed. It's a raw statement. Okay, you have seen wedges. What is a wedge? Pattern, ascending triangle, descending triangle. Every pattern from those traditional pattern family has a price action inside it inbuilt. That is something everyone should know. Okay. Now, in each case, demand or supply is being cleared, reaching the point of zero SND. The angle of compression must not be beyond 45%. I'm sorry, 45 degrees, which can be mistaken with an upward or downward trend. Try to understand this English. When we go into the anatomy, you will understand better. Compression leads to zero demand or supply, at which point the price jumps into the high liquidity area, which can be mapped on the chart. Is it not correct, friends? Water flows from a region of higher concentration to lower. Price moves wherever there is high liquidity. This area becomes the turning point. Okay, so this is just the literature of compression. Don't worry about it, nor you have to know about it. I am just sharing with you so that you are aware of it. Okay, this strategic point is a place is a pending order either at the supply or demand area closer to the zero wedge ascent area as mapped in the chart. Pending orders can also be made in multiple layers with small quantity. Okay, now let us go into the anatomy. That is best. That will talk about everything. Friends, what is this? This is a rally base, I'm sorry, drop base rally zone. It's a good zone, right? It's a DBR. It's a demand zone. Friends, I just told it's a demand zone. I never told it's a power pattern demand zone. There's a lot of difference between a demand zone and a power pattern demand zone. Is that clear, friends? So, which means every demand zone is not a tradable zone. Now watch this. This is a supply zone. Why? Because it is a rally based drop. Now, suppose the institution wants to dump all the stocks at the supply zone. Okay, the mission is to dump all the lots that we have at the supply zone. We want to essentially dump it. Now, when I want to dump it, what is the first thing I need? I need liquidity. Thank you, Manish. Thanks. That's a good statement. I need liquidity. When there is no liquidity, how can I dump it? So liquidity is a must. Point number one. Not only that, when I dump it, I want price to go freely to the bottom. How will I ensure that I win the match? Number one, the match should happen. That is liquidity. Number two, your opponent has to be weak. Okay, your opponent has to be weak. Is that correct? Liquidity is something which triggers the fight. Okay, and second thing, my opponent has to be weak and he should take all my orders. So what we'll do, the institution purposefully keeps moving the price up. For example, what happened now? Is this a rally base, drop base rally? Is this a zone? Okay, that is a zone. Good. Now, what happened? The institution tries to push us the price up. Okay, they try to push us the price up by ensuring that all the demand orders are destroyed. The mission here is to pump everything at the top, which means we need orders. So what they do, they will take the price up, they will allow the price to go down, and the price goes down, eats away all the orders. What kind of a zone is this? It's a tested zone. I am talking in terms of freshness. Correct? Is it a tested zone? The zone is no longer fresh. Okay, when the zone is no longer fresh, what does it mean? It means the zone has become weak. Money says the order has been consumed. Brilliant. That's the underlying key point. There is not much of orders. The orders there has been eaten. Okay, now let me do this. Now again the price goes up now. Okay, and then I mark this zone. What kind of zones are these two? Is it level over level? It is not just level over level, it is also zone over zone sandwiched. It is much dangerous than level over level. The level over level will at least give you some space, whereas compression will not give you that space. It's like a loaf of bread. Okay, it is always compressed, it is always placed upon each other, and it is sandwiched on it. Okay, so there is nothing in between. Now see what happens. So what happened now? So is this zone fresh now? The second zone is also tested now. Out of the two more zones which have been created above the demand zone, both are no longer fresh. Now, can I mark another zone there? Because that is another drop base rally, which is my standard pattern. So what is happening now? Price is moving up, but every time price is moving, price is coming back and eating the orders below. When the price comes back and eat the orders below, what is happening to the buyers? What is happening to the buyers? Buyers are getting killed. They are getting weaker. They are getting weaker. Every time they go down, pick up the orders, the buyers are getting weaker. Now tell me, what is the essential rule of price move? When will price move up? Officially, when you see a momentum candle, you will say whenever there is a demand, price moves. When we will say buyers are strong, so price is moving up. Strong demand is strong momentum is strong move. Okay, but in this case the price is moving up not because of momentum, not because of the buyer strength. This move is cheating the buyers, it is killing them. It is slowly. See, there is always a saying, stock market is a place where a retailer will never get killed. Why? The moment you kill one retailer, 100 retailers will get scared. So what markets will do? They will bleed you to death. It will make a mark on your hand, a bit of blood goes away. You will just rub it off with a cloth and ignoring it. It's such a small wound, who cares? And after some time, another mark will come and so on. So 90% of the time, retailers will not even realize they've lost their money. The beauty here is price is moving up, but buyers are not strong. Is it not abnormal? Now let's see what happens. Another zone came, drop base rally. What happened to that? So every time price is making an up move, it is coming back, eating away all the demand orders, thereby making the buyers weaker. This is one of the most crucial patterns where price rallies, but it makes the buyers weaker. Remember this. This is one of the very few scenarios where price does this. Okay, and oops, price again goes to the supply zone, creating another set of zone which is again testing the lower zone. Now can you look at it and tell me which is the fresh zone in this entire space? Is there a fresh zone here? No. Now remember this fact, price has traveled all the way to the supply zone. Now not only that, this price is not moved by the strong opponents. In a match you will only win 2 times. Either you play very well or your opponent played badly. Correct, friends? In a match you can win only in 2 scenarios. You played extremely well or your opponent played pathetically, because so you won without any big effort. Here we have seen the price has rallied to the supply zone without the buyers in control. Here every journey the buyers have bled. They have bled, they have lost their orders, they have become weaker. Now imagine a huge order here. Imagine a huge order placed here. What will happen to that? Okay, when you place such a big order there, the institutions will dump the price and it will blast to the bottom. This is the essence of compression. Push the price up, eat all the orders down, and then dump everything to the top so that you can get all the orders filled. What will happen? When the price come here, when it is coming, who is there to fight it here? Who is there to fight here? Who is there to fight here? Everywhere orders are eaten. No, everywhere they are weak. They surrender. Everyone surrenders. Correct? Their stop loss will hit. It will go and pierce that zone. Okay. All right. Let's see how supply compression look like. This is the pure case of pump and dump. That's what we did now. We pumped the price to the top and dumped everything there. That is a drop based rally, a normal demand zone. That is a rally based drop, a normal supply zone. Now price goes to that supply zone, eat some orders there and come back. That is a zone. What kind of a zone is this? Is this an authentic zone? Is it an authentic zone? It can't be an authentic zone because it is kissing the other zone. It is reaction to the other zone, right? How can you call it as an authentic zone? If the zone happens here, for instance, if the zone happens here, I can call it as an authentic zone. But this zone is kissed and tested that zone. It is a reaction to the other zone. Everyone agree? Yeah. So now that zone is tested. It is a reaction zone and it is tested also. Now, okay. Now it's a reaction zone and a fresh zone. Right now at this moment, is this zone fresh? It's newly formed. Correct? It is fresh. Perfect. Now what happens? Price goes back into that area, kisses that zone and creates another zone. Now is this zone fresh? It's not fresh. Is this zone fresh? It is fresh. Thank you. That is fine. Now similarly, price keeps creating a series of zones which are sandwiched upon each other. And at the end of the day, you cannot find a single fresh zone. I repeat, in case of this scenario, you cannot find a single fresh zone. Today, in the previous examples of caps, I was throwing an example of FTR. One of you said, Ashok, the whole thing looks compressed. But the zone I marked was the only fresh zone in the entire journey. Yes or no? Somebody said, Ashok, it is compressed. Then I showed the zone I had marked was a fresh zone. Price only reacted from there. It's Sendil. Yeah, thank you, Sendil. Now, what is happening? We have created series of zones which are sandwiched upon each other and everything is tested. What does that mean? The price has been pushed down, okay, thereby killing all the sellers. Now, when I dump a huge demand zone here, when I pump a huge order here, what will happen? Will it not brutally react? It shoots up royally. That is the essence of the whole conversation. Okay. Okay, now to summarize, can we say that this whole compression is nothing but a series of tested zones sandwiched upon each other? I repeat, compression is nothing but a series of sandwiched zones which are tested. And imagine, in our conversation during the last week enhancement theory, how many of you remember that our departure has to be strong and arrival has to be slow? And how about an arrival which is compressed? An arrival which is compressed is superior. It will make our enemy weaker. We have a very weak opponent. A strong departure will show us a strong team. Okay. Now, let us see the whole scenario in an example. Okay. Okay. Compression into supply. It's a type of price action where price swings up and downs, absorbing supply demand. When price rises, creating higher highs and higher lows, each time it comes back down after a rally, it absorbs demand. And there is a reason why price does this. Every time it comes back and eats away some demand. These zones are standing in way of a big, nice short. The institution wants to dump all the things in a big short. So the buy orders at these levels need to be absorbed before the price can fall freely. That is the reason why they will slowly keep coming and eating the orders. Pro money moves price in this fashion to clear the path for a short while using the buy orders to build their short positions. Okay, the pro money is nothing but institution. They will move the price in this fashion in order to create a short at a later point of time, and they will start pushing the price up. Gopi asks, because of this compression, who is going to get benefits? The only person who's getting benefit is the institution. Sagarika says, Ashok, can I say that whenever price comes to a zone in compression, it will react very fast? Yes, because a compression is the best form of arrival. Yuan says, Ashok, can you explain the difference between compression and congestion? Congestion is a zone. Okay, series of congestion. Let me draw this for you. Okay, this is congestion, this is congestion, this is congestion, This is congestion. What are all these things? These are all places where there was traffic signals. Where there are traffic signals. You go fast, stop there and move ahead. These are nothing but zones. Now think about this. You want? This is congestion, this is compression. Can you make out the difference? The compression will ensure you come down, eat away the orders and then zoom up. Okay. When you see this happen below a supply level, once the last level demand is absorbed and the supply level is reached, price will often fall quite easily through the area. And this is called as compression. Muthu asked, in case if there is any fresh zone in the compression, what will we do? Only that fresh zone might give a reaction. Even that fresh zone would be compromised. Think about it. Let me draw this to you. You are telling this is all compression, okay? Compression, okay? And this is one fresh zone, and then compression, 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 and so on. Now this is a fresh zone, okay? Very fresh zone. But remember, here also your people are weak, here also your people are weak. You are isolated. Can everyone connect with me? Suppose you are a strong buyer, okay, this is a demand zone, okay, this is a natural demand zone, it's an authentic zone too. Now here also your buyers are weak, above that also buyers are weak. Don't you think you're cornered here? You will not get support anywhere. Okay, you will revolt, you will definitely revolt, you will react, price will react there, but it will eventually break through. See it, we have just marked zones here. We have marked beautiful zones. We have picked up all the rally base rallies or the drop base rallies, and see all zones, these are all the zones. Now remember, all these zones are tested. This zone is tested here, this zone is tested here, okay, this zone is tested here, this zone is tested here, this zone is tested here, this zone is tested here. Can anyone show me one fresh zone here throughout? Correct, Sendil. Is that clear, friends? This is compression, and think about it. See the amount of time it took from this point, okay? It took this much point to fill, right? How many? 1, 2, 3, 4, 5, 6. And see the fall. It came in 1/6 of a time. 15% time it took to clear off everything. Can you give me a check if you have understood this compression? And why price can free fall? Because all these zones are tested. Jitesh said there is 2 fresh zones, is it? Let me locate. This is a fresh zone, I agree. Okay, ignore this fresh zone. Talk from here. Above this, show me one zone which is fresh. I don't think so. Every time it come, and majority of the times, friends, whenever there is compression, price comes to the root of compression. For example, if I take a short here, generally whenever there is a compression, I will tell this is my target. Because price easily travels. Is that clear? So compression into demand. This is a scenario where price creates swing down and up. Okay, you need to understand here in this price action, the price goes into demand zones where it absorbs the supply while moving down. In this game, Pro Money clears all the supply while moving down, and finally they will fill their long positions. Once the last level of supply is observed, once the last level of supply is killed, the price will happily pierce through the compression zone because the zone is become weak. Throughout all the zones are weak, they can never fight the massive order that's coming in. Identifying this PA will give you a clue as to where price will turn and how far it will move. And friends, compression is the only concept where we look forward for an RR greater than 1:5. Sometimes we take order 1:10 also, only if there is compression, or else no. We will stick to 1:3, 1:5. Very rarely, whenever there is a compression, we will take it up. Okay, I'll show you the comparison. Look at the wedges. This is a wedge, right? The breakout of the wedge is what the traditional pattern traders do. So what is this? This is nothing but compression. This is nothing but compression, nothing else. And there will be a zone where they will take a trade. Everywhere same story, where they can take a trade. Anas is asking any new compression. There is lot of compression. I'll show you. There are so many scenarios. I'll show you in charts. So which is the strong arrival, which is the weak arrival? Can you make a comparison, friends? Which is best? Okay, the best arrival for us is the first one. That is good for us. Why it's good? That will make our enemy weaker. Brilliant. Departure is fast in both the case, but look at the arrival in case 1, case 2. The best arrival for us is the strong arrival in case 1. It will make your demand strong. So you are a tough player and your enemy is weaker. Okay, the arrival has to be like this. You need to struggle to mark one damn good zone. You should not find any good zone anywhere. Everywhere it should be compressed. You should not be able to mark a single fresh zone. That is the requirement. For example, even here, this is a zone tested. This is a zone tested. This is a zone. See, this was a fresh zone. No, even this was tested here. But this compression is the worst compression. Okay. Here is an example. Look at this scenario. Can you find a fresh zone here? All are tested. Very nice. Now get me one good fresh zone here. Let me see. Think about, observe. Mark, if I talk here, this is one base. This is a base. This is a base. This is a base. Every base is touching everywhere. Every base is touching everywhere. Till this point. This is the only fresh zone. All right. Now help me find one good zone here. Have a look. Can anyone work out? All are bases. Can you make out? Now look at this. This is a Wipro chart of last week. Okay, let me ask something. Friends, what is this? It is a beautiful FTR. I guess all the team members should be able to find it now, because we are moving ahead with other topics. Here is L1, here is L2. This is FTR. Vikram, Muthu, Kiran, it's an FTR. Now anyone having an issue that it's not an FTR? Okay, it's a very good power pattern. Now look at the way that's departed. Drop, base, drop, a long base, drop, whatever the travel is significant. Now help me find a single zone here which is fresh. Help me find a single zone which is fresh. If you personally ask me, this zone is tested, rally, base, base, drop, base. This is the only fresh zone so far. See the departure, see the arrival. It's a FTR power pattern, and I think we can look forward for a trade here at 235 levels. 230, 235 levels. Okay, it's slow arrival and fast departure. Okay, SR, you can mark this SR. Try to mark one rectangle here. It's impossible. I cross-checked. I marked this yesterday. Till here, all zones are tested. Okay, this is amazing. This is TCS. Now, can someone help me to mark a good zone here? Who's this guy? TCS, right? Let me go on to the chart. I'll take Viratech. Okay, look at this. Now, can someone help me with a base? Everyone agree this is a base? Is that a base, friends? The long ERC base candle. So that is a troublemaker. And after that, there is one base here. Even that is tested here. It's tested here. Then after that price, what did it do? Rally, drop, 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 base, base, rally. Even that got tested. There is another rally base drop that got tested. There is another rally base drop that got tested. So throughout, it's all testing. Okay, great. Now let us do one thing. I'll erase this everything in TCS and let me mark the levels here. SR line, friends. Friends, what is this? Only problem is there is a level over level that we need to be careful. Is that clear, Shivangi? Now tell me, how is the departure? How is the arrival? Fix these kind of crazy things. Okay. Try to find just 100 such trades in a year. You will have a rocking result. I promise you. Tomorrow, if TCS comes down for any reason, I will tell you blindly, it can come till this point. Is it sensible, friends? Okay. So ultimately, if suppose you take this trade also for some reason, your RR is here only 1:3. 1, 2, 3. Since it is a compression, you can target this point. Brilliant question. Urjil comes with a statement. He says, this is all based on the fact that the order book does not change, right? Yes. Always remember, price action has one fundamental limitation. It will not consider fresh zones that coming, fresh orders that coming in, the fresh water that is entering the river. Everyone agree? That is a fundamental flaw in price action. Why your price action is failing? Most of your trades are failing only because of that. Because there is fresh orders coming which you never saw, which you never knew. For that, you can even take confirmation entry, which we will take. We can, for such scenarios, see, this whole game is about set and forget. But if you want to trade, then what you have to do, you need to wait for the price to come into that zone and then see if it reacts. If it reacts, and then wait for a price action on a lower time frame. Now you saw in hourly, right? This is daily candle. Okay, if you have to wait for price to react from the zone and go to a lower time frame and then pick a price action trade. That is called confirmation trade. Is that clear, Vikram? We'll do that. Sounds good. Thank you. Now look at this. This is Glenmark Pharma. I'm trying to mark zones here. For example, this is tested. This zone is tested. This zone is tested. This zone is tested. Everything is tested. Look at this guy. This is an example of a guy called Godre Philip. Okay, he took almost roughly 2 months, at least 50 trading days in order to reach where he got. And he came down 1, 2, 3, 4, 5 days. He covered almost 75% of it. Okay. So there is a question from Sanjeev is asking, Ashok, can I short TCS now if it comes to that zone? Just first verify your position sizing, check your capital, verify your position size, your betting, all those things. If they are all in sync, you can happily trade. But everything should be in par with the capital size. Whatever is your capital, your betting should not be more than 1% in a learning phase. Okay, people who don't want risk, tension, you can buy put of not even this month, next month. Don't try to play put of this month. What if it becomes operation success, patient tide? Now this guy is Cholamandalam Investment. Do you know why this big candle came? How much is this fall? Single day fall. No, this is a monthly chart, sorry. Okay, this is a monthly chart. Single month it fell from 320 to 145. 50% fall came. Now in this region, show me one fresh. Shall I show you? Watch my markings. Who is this guy? Cholamandalam, right? We'll do that in chart. That is better. It looks better in that. I can get that rectangle easily. What's his name? Cholamandalam. Oh, yeah. Monthly. Now, if I look at this chart, now look at this, friends. Number one, this is my first zone. Rally, drop, base, rally. Okay, that is also base. So this whole thing is a base. It is tested here. How many of you get it? It is tested here. Testing done. Now I'll go and mark the next one. Rally, base, drop. Okay, it is tested here. Okay, this guy came, even this it got tested here. Now I'll try to take this zone, rally, base, 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 rally. That is also tested. I'll take this zone, rally, base, rally. Okay, and look at this zone, drop, base, drop. Even this guy, poor fellow, is tested. So whatever story this guy is created since here. Okay, how much duration? It's like 1, 2, 3, almost more than 3 years. 46 months. Whatever was done, it achieved in 1 month. Now, if you ask me why this particular price stopped there, drop, base, 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 rally. This is the only untested zone. Starts from here, starts from drop, all bases, rally. Brilliant. Ritesh Patel found some interesting power pattern. That's a cap. Why it's a cap? Step number 1. Step number 1, rally, base, rally, authentic zone. Authentic zone is engulfed by this guy. Okay, let me erase everything. Okay, I am removing all these markings of compression. You guys have understood why that compression exists. I delete all studies. Now I will mark it for you. Okay, this is your authentic zone. Okay, and authentic zone, rally, base, rally, and then rally and drop. This is your top. Okay, and this guy is the candle which broke. Go reverse, stop nearest point. This is the source of engulf. This whole thing is the source of engulf. Okay, and this is your origin of engulf. It's a beautiful trade. Can everyone give me a check that you have understood why it's a cap? There are 4 rules per cap. Authentic zone formed, number 2 authentic zone engulf, and before that number 2 drop, rally based drop formed. Here there is no rally based drop. Why there is no rally based drop? Okay, this is the best way to show you. If I mark like this is a zone where I need to check. I go to weekly. Okay, look at this. In weekly also it is rally and drop. How many of you get that? Now I'll go to daily. Now can you find rally based drop? See, here it is. This is my daily zone. Can you make out, friends? It's a nested level. Daily zone is the entry. This is how you can go over it. Shivangi, happy? So please understand, on a positional trade, this works like a charm. Every lower time frame you go, your challenge increases because volatility increases. Not only that, manipulations increases. How many of you understand my point? When you are trading, you do one thing. Talk to investors. Think yourself like an investor. As an investor, watch the levels. You can pick stocks at lovely levels. No fundamental investors can ever pick that way. At monthly, weekly, daily level, price action works like charm. But when you go to lower time frame, let's say 1 minute, 5 minute, 15 minute, it will throw challenges. Why? The institutions does extensive manipulations, but these are things where manipulations cannot be done easily. They can't cheat you every moment. Why? Friends, why can't an institution cheat at a higher time frame? Because the cost is very high. Recollect the same example which we spoke, the Taliban. They cannot throw a bomb on one guy, though they can see, though they can kill him. Correct? Okay, sounds good. Now let me go back to my presentation. Okay, this was Cholamandalam. This guy is Ultratech. Now show me this guy. I doubt even this guy. You know what? When I make selections for stock in Funda, I see these things. That's why some of my techno Funda stuffs don't fail that easily. Now show me one good zone for this guy. Now the price has come here. Always take a straight line here. Okay, this low he has already broken. Now below that, is there a zone? Okay, there is a drop, base rally here. This zone is already tested here. Can you make out? This is tested. Is there a fresh zone below? No. This rally base drop is there. It is sandwiched by this guy. The only fresh zone I can see is this. And below that, everything is sandwich. Everything is sandwich. Everything is sandwich. Show me. Try to show me good level. Everything is sandwich. Everything. Which is the cleanest zone here? This one. So that is why generally I give targets like this, because someday it will break. Based on this principle only, this foundation of compression only, 3 months back I told Bank Nifty can easily break 19,000 or 20,000. Okay, people even trolled, how you're crazy, it's around 30,000 level, it's making higher high. Let it make higher high. All I am telling is it will break. Now the point is, from here, now think about it. Now see, this is where the intelligence lies, how to interpret. Okay, that's where the maturity comes. Now I am telling this guy will come to here, but before coming here he might not directly come like this. Instead he might do this and then come. That is the key point. You need to understand and digest this essence. I am waiting to pick I'm waiting for Nifty to come between 7,000 and 6,000 levels someday. Okay, I still don't believe in the valuations of these companies, but the moment it comes, I am telling you, there are some jazzy stocks which I wish to buy. I am going to pump big time. Yeah, I know where the market is now, but I have a crazy expectation. If it comes there, I am going to pump the biggest equity push in my life. I will clear up all my mutual funds, my PF money, blah blah blah. I'm going to push big time, because I know from there the mother of all bull runs will stop. And below that, I don't care. If you ask me personally, okay, Ashok, you're so confident, if price comes to 6,500, 6,300, you will buy. What if it goes to 4? If it goes to 4, I will average. Because Indian market, you cannot get some stocks at mouth watering levels, but an era will come where you will say, hey, you know what, Yeah, how many of you remember my father picked Infosys at 50 rupees, 100 rupees, HUL of 25 rupees? That era will not come again. Okay, there is full of compression in Nifty and Bank Nifty. Now you guys go and check. Indraprastha Gas. They can make series of higher highs. I have no problem. But once this one bad news, one negative quarter, free fall, nobody would be there to hold it. Can someone show me Indraprastha? Show me one good fresh zone. Okay, the fresh zone that I can draw right now at this moment is this. Drop, base. No, this is also tested for this zone. No, this is also gone. Everything is tested. I don't think anything is there. No. It's a phenomenal thing, compression. If you watch compression, you can pick big trades. And friends, I will never exaggerate things. Okay, I am brutally very realistic when it comes to trading. I am one of the few people in this country, not even in the city, in this country, who don't give exorbitant numbers. All I say is even with 30% we can fight this game out better. The reason is someday or the other everybody will sink to the realities of market. Compression is the only scenario I take an RR of 1:10, or else I'll never claim. My RR is always 1:3, after enhancement 1:5, after compression 1:10. This is my thumbnail. This is my bottom line. Okay, and all these claims are based on math. Okay, and now let me show where that Nifty thing happened. Where is that Nifty? Bank Nifty? No, Bank Nifty. Bank Nifty. Bank Nifty. Nifty Bank it is. Nifty Bank. Okay, you know where I said look at this tested zone. Tested zone. Tested zone. Tested zone. Tested zone. And finally this tested zone. Tested zone. Okay, the only fresh zone for me was this. You know why I am waiting for that level? What is this, friends? What is this? It's a major SR. Okay, this is my level of action. This is where I want to do bulk trading. This is a cap. Of course it is a cap. Can someone tell me what it is? Zone broken. It is a cap and it is slightly tested. Okay, on a monthly zone it's a cap. Wait. How many of you remember? I don't know. The old timer should be able to remember, because I clearly told there is a clear Quasimodo in Bank Nifty and there is no Quasimodo in Nifty. And this Quasimodo worked like a charm. Okay. Cool. Sounds good. Now, coming back, the compression is very useful for our trading. If the price arrives at the tradable zone with compression, expect your trade to work extremely well. Compression is not a tradable pattern. It is not a power pattern. Compression will not tell you entry and stop loss. What will compression tell you? Compression will tell you the target. Compression will tell you how soon your target comes. Correct? Everyone get that? Compression is not an entry pattern. Compression is a target creation pattern. It's a trade enabler. Always look for compression towards supply or demand zone. Departure must be very fast. Arrival must be super compressed for a lovely trade. And then we come to another interesting pattern called as can. Okay, I'll not take much time, maybe 10-15 minutes, and then we will break out for lunch. Okay, so this can pattern is a pattern fueled with compression, friends. It is the fifth power pattern in the price action journey. It's called as dancing lady. I'll explain you why it's called as dancing lady. It's another lovely concept which creates confusion among retailers, and naturally the confusion creates to manipulations. And this pattern most of the times happens very nicely at the lifetime high areas. Okay, it can also appear in the areas of QM diamonds, which we discussed in the subsequent sessions. Here is the anatomy of supply can. Friends, what is this? Authentic zone has been engulfed, so it is a cap. Excellent. Okay, now you take a trade in the cap. Now assemble a cap with compression. That is your can. That is your dancing lady. Dancing lady is nothing but a cap with compression where you can have phenomenal target. Is that clear? It's simple. We just merged a power pattern with a trade enabler. Whenever you get compression in between, your target can be very, very high. Okay, why dancing lady? That we will talk now. Again, authentic zone, demand, compression into the demand. Boom. Very simple. Now, let me ask you a question. Is compression only applicable for caps? It can be applicable for anyone, no? Flag limit, FTR, anybody it can apply to. Ultimately, what do you want? I want a very weak arrival, that's all. Brilliant. And why is called like that? This is a French cabaret. Friends, this is a French cabaret. And during those days, those women used to have this gown. This gown was almost like this. Okay, when she's dancing, by any chance, if she lifts her leg like this, nobody will even know. And the beauty is those days, women are not protected. So if any man tries to come closer to her, she can give a solid kick. He will not even know her leg is upside because her frock would be like that. Similarly, she can lift the leg till her neck level. This is her neck level. Okay, many times once price drops, the compression will happen to the nearest point, and then we look forward for a fall. That is why we call this concept as dancing lady. The pattern looks like a dancing lady. So what are the rules of can? Strong fresh zone, strong departure, compression toward the zone, kick. She will kick, trade will happen. Look at this scenario. Okay. This is a scenario where, okay, a peak is formed, price compressed to that point, it will go to the neck level and then price drops. It's the name is can. So the reason why we call it dancing lady is because of the way that French cabaret dressing lady, and the pattern looks like her, but can I'm not sure. Here is the best pattern. Have a look at this. So many times the price did not go to the cap level. Many times price need not go to the top level. Okay, it can react at the neck. This is like the neck of the lady. So this is the height. Okay, comes kick. So to simplify this whole pattern, all we should do is imagine a cap with a compression. That is your dancing lady pattern. That is the simplest way. Okay, this is not exactly a pattern because here authentic zone is checked. Okay, you know why this authentic zone is matching here? There before we used to have a concept. Okay, let me explain you. Is this zone a supply zone? Everyone agree? And this is a demand zone, correct? Everyone agree? So before, what we used to do, we used to say if this is a fresh demand zone, if it is not touching another demand zone, it is okay. But later what happened, because of lot many confusion, we concluded that any zone should not be touched. That is best, which is confusion free. Okay, we'll get many of this. We can consider this, but currently in the new pattern we are not taking this as authentic zone. But the beauty here is more than the authentic zone breaking. Okay, that is not the key. See, this gap down is created. Okay, now this compression, because of which this guy became powerful. I wanted to simplify can, so I proposed assemble cap with a compression. That would be the dancing lady. We'll get many examples in the subsequent slides. I'll show it to you guys. I'll show you in the subsequent sessions. I'll show you many examples. Look at this. This whole thing is compression. This whole thing. This is Bharti Airtel. Okay. In fact, I wanted the price to fall here. Okay. And it, of course, it gave a reaction. I think so. Okay. And then it has gone made a lifetime high. But let me tell you, very soon, this is my level for Bharti Airtel 260. Now it is around 600 levels. Yeah, this pattern is not can. This is pure compression example. Okay. Can you go to the latest Airtel chart? But the Airtel is here. See, this is the zone of action. The previous high was this 520, 525. The next level was this. This was the level. Which is this level? This is the GAN 50% zone. How many of you remember we spoke about this? Okay, now price has gone and made a lifetime high. But for me, it has to come back because this whole travel is fake. See this? Base, base. See, this is also got tested here. Okay. Now look at this guy. Base. It's all abnormal push and stretch. Everything is tested. Monthly level compression is pathetic. So I told people this is an amazing price to sell at 600. You better sell now. 590, 600. Or else we can do one thing. This high which got broken, this can be the new stop loss, 520 levels. Anything below is pure compression. It will come to 250. So summary of our learnings. Dancing lady is a pattern which generally happens rare. If you can spot it, it can give high RR. We'll try to locate it. And remember friends, compression always look for minimum 1:5, 1:10. And don't forget the 4 rules. To simplify, look for a cap with compression. That is your dancing lady in summarize. Abhay says there are talks of Amazon buying stake in Bharti. That is the whole reason it is going up. Even idea is going up. For me, it all looks like really, I don't know. You know, idea fundamental chart looks threatening. God knows why. Sir, is Reliance an example of can? I don't know. Let me check. Oops. Reliance formed a good Quasimodo level here. Old students, if you can get this, it is good. How many of you can make out this? Okay. So if tomorrow, if it comes to 900, it's a lovely buy because many are trapped at that level. Now, where is the lifetime high? Lifetime high is this only, right? The lifetime high is this 1602, 1617. Yeah, lifetime high is made. Let me go to daily down. Okay, so let me take this triple top, triple top. No, I cannot call it as a dancing lady. There's no pattern yet. Let it come. Friends, why can't I call this as a cap? See this? I think I can call this as a cap. It's not touching. Does it touch this base by any chance? Let me put it to the left and right and reconfirm if it's touching. Yeah, it's partially touching. Sorry. Okay, I can call this as an authentic zone. Probably. Does this touch? Yeah, it's again partially touches. Okay, that is also not authentic zone. Let us wait, friends. Let us see what it does. This is not a dancing lady. There's no compression also. Now look at this. This is really crazy level. Okay. I've never observed this kind of scenario. Now there was a base, there was a gap down and again a gap up. Imagine how many people are cheated here, friends. Okay. The engulf of this base was done by this candle. The source of engulf for me is this. Okay, unfortunately this whole thing is to be taken as base, which is too big. It's like 8%. But definitely price when it comes back, it should react there. You have it from 890. Let us see, because it has made a lifetime high now. 16, 17. Let us wait. Okay. Where is the nearest demand zone? Yeah, this is the nearest demand. Let's see if it breaks this zone. You can book below 1500 if you want. Okay. The next strong buy comes here only 1200 levels because of this double cheating. How many of you can make out this? This region dominated this region. Already people were cheated, they double cheated. So definitely there'll be big orders here at 1200 levels. That's where the fundamentals change big time. So that is why I mark the source of engulf of that zone. This is the source of engulf. So this 1200 level is where we can rebuy. But one funny part is, please make out this. See this again. This is all compression. Okay, this is all is a zone. Very limited spaces in between. But there is PAZ there between each zone. There is a. We can't call it as a PAZ because it's not a power pattern. It's not that sandwiched also. So 1200 levels we can buy, and upper say let us analyze after a week or two and see how the chart emerge. Okay, cool, sounds good. With this we come to the end of the most interesting session called as compression. Friends, remember, it's one of the most beautiful important pattern which can give you a very high risk reward. So as I told, I always stick to 1:3. If I can extend, I go to 1:5. But beyond that, I will never do stunts of more RR. I take that risk only when there is compression, absolute compression. It is one of the best target defining mechanisms which are realistic in nature. They are no hype. There are many scenarios where price goes to the root of compression. All right, sounds good. Thank you very much. Can we use FIBO for RR target levels? No. Why do you want FIBO? You can use scan power of 8 also. More than that, we will do RR enhancement conversation that you will like it. That is another beautiful way. Okay. So 12:35, 12:40 almost. Shall we connect at sharp 2, friends?
An attendee in listen-only mode.
Their decisions. Disclaimer, please. So we will start with the first pattern called as 3 drive. Okay, friends, in traditional patterns there is something called as 3 drive. Okay, so this 3 drive and that 3 drive are different. All right, this 3 drive which we are talking is a purely arrival pattern. All right, so what is a 3 drive? 3 drive is a unique way of arrival at the zone. So how should the arrival be? There is a universal rule. We always decided that departure and arrival should be in a particular way. So arrival has to be extremely slow and departure must to be very, very fast. This is what we discussed. The 3 drive into the supply or demand zone can be a strong indication of a price reversal. It shows that price advances are slowing down while compressing up and down, taking out orders as it goes. This is what is compression, right? When price travels up and down, eating away the orders while pushing the price up in order to dump at the top. That is called as compression. But 3 drive is a kind of compression. It's a different type. It's a type of compression. Compression is a concept. In compression, there are some flavors. So 3 drive is one of the compression methods. All right. Now let's see how the anatomy of 3 drive looks like. We have a supply zone. We have a demand zone. Is that an SR line engulf? Okay. Price, when it moves towards this zone of action, it can be supply zone, it can be demand zone. What it typically does is it creates 3 ascending triangles, 3 equilateral triangles, 3 triangles which are in similar fashion before it goes into the supply zone and then reacts from there. Eventually, ultimately what this is doing is also the same thing. What this is doing is also the same thing. It wants the price to be tested so that the orders are already eaten, and next time when price comes into the zone, when price comes from the zone, it will elegantly pass through because there is no stiff resistance anywhere below. Okay, now that 3 triangles are called as 3 drive. Triangle 1, triangle 2, triangle 3. Can you see the 3 triangles there? It is concepts. Okay, now you might ask me, Ashok, does the 3 triangle has to be exactly same, exactly similar? No. In theory, yes. In practical, no. In theory, yes. In practical, definitely no. But it shows the shape of 3 triangles. Amit is saying this also looks like compression. I am telling this is compression. So 3 drive is a type of compression. That's it. All right. And Dibyakant says, Ashok, why 3? Is there any logic behind it? No. Definitely no. But one thing is true, don't expect it to be 3 drive every time. Okay, sometimes it can be 2 drives also. You may not see the third triangle. You might not see, sometimes even 4. That's what Raja says now. So don't always stick to this universal rule of 3, but majority of the times it will be 3. If you ask me, out of 100 times, maybe 60-70 times it's 3, and remaining times it can be 2, it can be 4, and any other thing. Okay. Now what is a 3 drive? In 3 drive, we officially look for 3 similarly proportioned triangles compressing into the supply or demand. Now this is a supply zone. We have 3 triangles. 1, 2, 3. Okay. It will finally assemble at the topmost corner of the zone. Okay, in this example it talks about QM and other things. Don't worry, you can ignore. We will talk about these things in the subsequent sessions. Okay, but the most important thing that we need to understand is that when price moves, ultimately if you draw the zones, the same thing holds good here also. All are tested, nothing is fresh. That is the foundation of compression, right? It is the same thing. That is why we call 3 drive as a type of compression. Now here is one pattern. Okay, look at this. 1, 2, 3 drive came into the zone and then it went off. It is just a pattern, nothing more, and it has no special significance, no special treatment, no special behavior. The basic foundation of compression itself holds good here. Everyone clear? The basic foundation of compression itself will hold good here. The same rules apply. It should be such that all zones are sandwiched, all zones are tested. That is all. Look at this guy. 1, 2, 3, and then it reacted. Okay, it's pretty simple. Look for 3 triangles, that's it. And don't always wait for 3. Always remember the foundation principle, you're always good. Now this is another scenario where I'll take a black marker, please. Yeah. Okay. 1, 2, 3. Now you can always say this is 4, no? Friends, we can always say this is 4. So ultimately, if it creates multiple drives moving into the zone of action, it is very important. And this concept, okay, you can see R1, R2, R3. This is another interesting concept which will come up next week. It is one of the smartest fake out theories that exist in price action journey. We will talk about it in the future sessions. Okay, for now just remember this much. That would be enough. Now let me take you to the next important concept called liquidity spike. We call it as the desperation to fill orders. Friends, this is a very, very important concept and I seek everyone's attention. What is liquidity spike? Liquidity spike is the last resort of a buyer before an inevitable reversal. What is the last resort? Something is happening at the last moment before the action. What is that? The liquidity spike happens after a major rally or fall. The price keeps moving in a zigzag fashion towards the zone. What is this fashion? Toward the zone. What is this? That is compression. Okay. What is this? That's a 3 drive. Simple. Thank you. That movement is nothing but zigzag. Okay. Suddenly you will see that there are no sell orders. The price is slowly compressing into the zone, and at one point of time you will notice there is nobody to sell. When there are no sell orders, what will happen to the price? The price moves up. Will it move very fast or slow? It will move very fast. Now, when I say there are no sell orders, I'm not telling it is 100% zero. It can either be no sell orders or very, very less sell orders. Very, very less sell orders. In either of the case, the price moves up significantly, instantly, in a very fast track accelerated mode. Correct? When the price goes to such an acceleration mode and reaches the zone, there the manipulation happens. There the biggest manipulation happens. Okay, at the zone there shall be huge sell orders which will push the price harder away from the zone. Now, how many of you remember the story of huge sell orders after compression? You all remember that? The institution wants to move the price up. After enough move, it will try to dump everything at the top. Okay, now what happens is this. Let me draw the scenario in a chart. That would be best. This will give you an amazing perspective of the entire scenario. See, I'm so good in drawing straight lines. Okay, now let me draw this. Friends, what is this? It's a cap. Thank you. Now, let me draw the same thing once more. Now what happens? There are two things. Number one, what is this concept, friends? This is, which pattern is this? This is a dancing lady. This is a cap with a compression. Okay. This is the simplest form of dancing lady. Now what I'll do, price is compressing upwards. You are waiting in the zone. And suddenly at one point of time, there are no sell orders. When there are no sell orders, what will happen to the price? It zooms ahead, no? When there are no sell orders, the price zoomed ahead. The moment it zoomed ahead into the zone, there's a huge big order lying there, and that order will push the price down. This is just a compression. This is compression with a liquidity spike. What is a liquidity spike? Liquidity spike is a push in the price, a sudden turbo move in the price because there are very least amount of orders or there are no orders. And once price goes to the top, that is where huge orders are available. It is like cheating. How many times you see in all the gangster cinemas, the police goes to capture the gangster, and suddenly they will think, okay, we have captured the gangster so easily, and at the end the gangster will cheat them some way or the other. How many cinemas we have seen the way they cheat cops, right? Okay, now Prakash is asking, Ashok, how do I identify this? Always remember, after a severe compression, if there is a strong momentum candle, that itself signifies you that is liquidity spike. Yes or no? Is that difficult for you to Prakash? You will see a big momentum candle at the end. Sensible? Okay. Let me erase all these conversations and let me go back to the discussion. How does the anatomy of the liquidity spike look like? We have a supply zone. We have a okay. Price is moving up. Okay. So what is this? You call it 3D, you call it compression. It's all fine. Okay. Suddenly at one point of time, price zooms ahead into the zone. The price zooms ahead into the zone. That is called a spike. Why did it zoom ahead? It zoomed ahead because there are no sellers. There are no sellers. Okay, these are the cops. These are the policemen who have gone. This is where the Don is hiding. These are cops. They go there. They think nobody is there. Wow, this entire fort is ours. When they enter, the Don shows his power and price drops down. Muthu, it can be any. If you look at the price only, you can make out. Suddenly, a sudden momentum into the zone at the last minute is nothing but liquidity spike. Will it only happen in intraday? No, it happens in all time frames. As I told you, generally, this zero order scenario will not exist. There will be some very limited order. In spite of that, the momentum would be very, very high. Okay. All right. This is the phenomenon. There's a brilliant question. Venkat is asking, Ashok, in case of 3 drive and liquidity spike, the zone into which they are moving has to be a simple zone. Oh, come on, is that the case? This is not the zone we trade. We always trade power pattern zone, sir. It's not just ordinary zone. Because you don't take zones in ordinary zones, right? It has to be essentially be a power pattern. Okay. Good question, by the way. Thank you. That is all compression. And look at the classroom scenario. Look at this example. In this example, look at this. There is a big compression happening everywhere. Can you make out? It's all compression. How many of you make out? Amit is asking, what is C and LQ? It means compression and liquidity. It's all compression. The price goes, suddenly to rally into the zone, picks the orders and drops. Picks the orders and drops. Okay. Looks like the compression broke. What do you mean by compression break? There was always fight. Throughout it was a fight. What is compression? Compression is continuous fight. It's not that army is stationed at different location. The entire length and breadth of the travel, there are warriors fighting. Okay. Now, so when this compression happens and once that spike comes from the fresh zone, the typical price will react. Okay. And price always cuts through the whole of compression. This is what I have been telling. That in case of compression, your target has to be bigger. You don't have to stick to 1:3, 1:5. Even go to 1:10. That is still fair. Interesting question from Vikram. He says, Ashok, if I see compression is 2 TB and 3 TB, fine. No. How is that related to your entry, sir? No, for example, this is your cap. Okay. So you have throughout there is a compression and suddenly there is a spike. Now all I'm telling is this is your entry, this is your target, and this is your, this is your stop loss and this is your target. Now what has that to do with 2 TB and 3 TB? No relation. Okay, if you are telling here only it does 2 times and then fall, that we can't help. That is a normal trade for that matter. What if the spike happens because of a gap up after some news? Why would news come always at the zone? Yes or no? It's a very valid cap. Prakash is giving an argument. He's telling Ashok, anyway, I'm going to take a trade in the power pattern supply zone. But how does this spike matter? Sir, the spike and compression matters that the probability of your trade being successful is very, very high. Okay. The spike is telling you the probability of your success is very, very high. Now let me draw something. What is this? Flag limit. Okay. What is this? It is an FTR. Okay. Now, what is this? That's a cap. Now, what is this? It's a swap. Superb. It's a swap. Brilliant. Thank you. It's good. We should keep doing such exercises once in a while. It's a good homework for us. Look at this example, friends. Is this all compression? Have a look at it. It's absolute compression. Okay, it is compression. Now, after the compression, see this one. See that momentum candle. Okay, that is called as liquidity spike from the zone, where there is a void in this region full of sellers. There are a lot of sellers here who are fighting with the buyers, and again they will fight with the buyers. The sellers will fight, but here there's a huge number of sell orders which will push the price down. Remember this scenario. Okay. Good. Look at this example. This is good. Is this a classic example? How many of you understand this? See, this is all compression, and then this spike came. Okay. Raja is asking, Ashok, sometimes spike comes from and then compression. No, that is just a chart. That's it. It's not a it's not a pattern. If you come across that scenario, please send post that chart to me, and we will analyze. Where is the power pattern zone here? Okay, you want the power pattern zone? It was here basically. It was outside. Okay, Sudipta answered. Cool. Sonto has a brilliant question. Ashok, does the liquidity spike sometimes pass the zone in order to hit stop loss? Yes, that is possible. Such fakeouts are common. If there are very high orders, they can do that also. It's possible, Sonto. How to interpret its all-time high? No, I never said this is all-time high. Okay. See, these are some of the core price action approach that traders should follow. Okay, friends, very important, very crucial things that are relevant to our trading. Okay, this is a QM level, don't worry about it. Next Saturday we are learning this. The first concept you have learned, compression from the zone. Okay, friends. Sure, Amit, I'll post this on Telegram. Okay, compression into the zone. The second is compression with liquidity into the zone. All right, the next one is fake out. We have not yet studied this. This will come up next week. Next one is SR flip. This is a normal flip, and the next one is diamond. So the fake out, diamond, and QM, all three of them we will study next week in micro detail. Okay. Now, so what all did we learn in the last two splits? One is compression, three drive, and liquidity spikes. They will increase the probability of your trades and the probability of achieving your targets sooner, and it will also increase your success rate. Why? Every time you see a compression, your enemy is very weak. Okay, and by principle we always look for very fast departure from the zone, but we look for extremely compressed arrival from the zone. Fundamentally, we have not changed whatever we discussed on the 10 rules of enhancements. Please recollect, all these are flavors of enhancements and nothing else. If the price comes to the zone by eating all the orders, there is a high probability of fall, so that there is no stop, resulting in good fall. Okay, how many of you agree that approach is equally critical along with departure? Not just good departure, we want a good approach also. With this, we come to the end of this simple session on compression, liquidity spike, and three drive. And next week, we will jump into the most crucial, critical, and advanced sessions of Quasimodo, Diamond, Advanced Quasimodo, fake outs, RR enhancements, and many other interesting topics. All right, now please shoot your questions. Friends, if I have missed anyone's question, please retype it. I will take it one by one. Yuan is sleepy. By the way, friends, we must be very appreciative towards Yuan. Yuan has joined us from the US, and probably the time is maybe at 2 a.m., 3 a.m. in the morning. Sir, hats off to you, sir. You're one of the very few persons who is devoting time sitting from the US. We had one more colleague by name Babak from the US. Even that great man used to attend the whole program. Hats off, Yuan. 4:10 a.m. God. Amit says, I find it really hard to find these patterns quickly on the charts. It was very hard. I myself took more than 3 months. Amit, you need to post chart. The day you post 100 charts, you will start seeing something. The day you post 500 charts, you will start getting command. And Ramdas says it is more evident that intraday chances of cheating is more. Yes, absolutely. Where will you see maximum manipulations? Where will you see maximum manipulations? So friends, you guys were talking about some chart number set where you see similar patterns. Tell me those chart numbers. We will look at it. Crude you are seeing with liquidity spike. Okay. You need to first find a power pattern and then only it should come. This is a good FTR in crude. Okay. Now price is going up in crude. Now this is all a zone. This is a zone. This is also a zone. Now this is also base. All that is compression. Now this is all is a zone. Okay, and this is a zone. This is a zone. These are the clear zones that exist. Not much of compression there. You will have to wait for it. Oh, okay, Yuan. I understood, sir. Okay. So, friends, what is this? Shivangi, what is this? Amit, see it properly. It's not a flag limit. Thank you. It's crude. Sanjeev says Bata. Oh God. See, this is all compression. How many of you get it? Can anyone mark single zone with this fresh there? I doubt if you can try. Yeah, there is one zone. I guess this guy is a fresh zone. Yeah. But again, it is not a, it's a reaction zone, not even an authentic zone. See, this was the last SR line there. This whole thing is compression. So I don't dare to even think about any price action here. Off late, most of the charts will show these kind of compression and spikes because of one reason. Market is that brutally volatile. TVS Motor, Abhay. Okay, let me mark this. This is a base rally, drop base rally, and then drop base rally, gap up rally. Okay, drop base rally, rally base drop. Okay, and drop base rally. Yeah, all that is compression. Now look at this part. This is also brutal compression only, right? Everyone agree with me? TVS Motor. That is also compression. Prakash says Bandhan Bank is at Is there other name for it, Prakash? No, I don't have that chart in my list. I'm sorry. Dinker says HDFC Bank. HDFC Bank also, I don't see anything interesting. This was the last SR line which got broken. That is good. That is a prospective flag limit, but unfortunately, because of level over level, it becomes big. So we don't even try that stunt. Okay. And then this was the last SR line where price stopped. Okay. So this is a zone which reacted already. So that zone is already tested now. Now we need to see if it breaks. But this is all compression again. I'm fine with this. This is all compression. Amit says Tata Motors has a liquidity spike. Let's check it. See, this is the SR line for me. This is another SR line where price stopped. I'm just putting lines where price, if you put SR lines, you will find patterns. Okay. This was the next SR line where we marked the line. Okay. This was cutting through the momentum candle. This is ruled out. But this guy is cutting through the gap. I guess this can be a good zone. But is this compression? Let me mark it clearly. Drop, base, rally. Rally, base, base, rally. Drop, base, base, drop. Drop, base, base, drop. And rally, base, base, drop. These three things are all sandwiched, but upper it looks like one. Yep. Let me remove this guy. We're talking about this guy, right? Oh, this base, open is equal to low base. Okay. Okay, all right. I guess we can wait for a reaction here. This can be a good trade to try. 4.7%. I can make this zone much lower if I want it. Yeah. Now it has eaten everything. All gaps are killed. Okay, this is the next gap. It almost killed this gap also, if you see. See, even this gap is gone. Only gap is this. But now it has to give some reaction before going up if it wants to. Good observation. Okay. People say we had seen Kaplan in the list during fundamental session. Kaplan point lab. Okay, monthly. What is this in Kaplan? Abhay. It's all compression. Can you mark a fresh zone there? The best fresh zone that you can mark is rally base. This is one fresh zone. If I keep that aside, this is another zone, and this zone is already tested. This one 40%. Arey baba. I'll mark body to wick. This is a next zone. Okay. So I feel this can come to this next zone also. There's every chance. You never know. Okay. Nishi is asking, Ashok, last week you said you will see manipulation in gold and gold will come down. Now, if you see gold has come down, can you explain what was your study? Did it come down so soon? I thought it will take time. No, it will take time. It will take time. Can you make out this compression in gold? This is compression. This is compression. This is all bases. This is all a base. And then this is a base. This is base already tested. This base is fresh. Does it? No. Base gap up came. No, it is already tested. This is a base. So it will come. It will come. Okay. I strongly feel gold will come down. Ashok, in gold, is there a cap? No. If you are talking this one, yes. If you are talking about this rally, this one, okay, that was an authentic zone. Authentic zone was broken. So the zone is this ideally, but that is a full candle. If you take like this, the zone is already tested. So there is no more cap there. Balkrishna is again full of compression. This is all compression. Try to mark one zone. According to me, the only fresh zone here, if you ask me personally, is this. Look at this guy. Rally, base, base, rally. This guy. It's the only fresh zone now. Below this, everything is tested. Tomorrow, for some reason, okay, let me do this. So, drop, base, base, rally. See, this guy is tested. This is a fresh zone. Tomorrow, if Balkrishna comes down, okay, if it comes down, for example, it will break this, react this, and it will break fully to the bottom of compression. All these things would be eaten up if it comes below this 940, 950 levels. Okay, and there's a lot of level over level here. That's a big problem. Too much of level over level. That is the biggest problem here. But I am happy with this zone. This is a Quasimodo level. Okay, this is the zone of Quasimodo. Let it go do further. Let it come up. We'll wait at this level at 1250 to short. Okay. So keep looking, keep looking. There are hundreds of stocks with extensive compression. Think about it. Look at compression on the downside. You can pick up amazing start at demand level. This one I had already told you guys, right? See, this is all compression Adani Port. And I guess I mentioned about a trade somewhere here. Okay, actually, if you ask me personally, this is a place to take this trade only. This is an FTR. Price breakdown made a low. I'm looking at it this way. L1 and this is my L2. Okay, LG Equipments. Never heard of this company. It's again full of compression. It's all compression only. Okay, Ramu says Mahindra. Mahindra and Mahindra. So let's take a straight line. I'll put an SR line here. I'll go deeper. Okay, I'll draw the SR line properly. Okay, wow, it is cutting through the base candle. I can take this zone as my tradable zone, but this is level over level, this is level over level. That is the problem. Shit. If this was not there, this could have been a good candidate to short. This is a zone tested, zone fresh. This is a zone. This is another zone. This is zone tested, zone tested. There is enough good enough compression there. This is again compression, and this is also a zone. Yeah, so almost it is compressed. Okay, we can definitely play around this here, but the zone it becomes too big. That is a big problem. Okay, so Namrat says Maruti. So much of compressions everywhere, such a nightmare. Think about it, friends. Every compression tells you that so many people have been cheated. So this is my last big SR line which was broken. So this particular base candle tells me don't even attempt a trade here. You'll be cheated. Okay, let's not try that. Sanjeev says Bata. Okay, we'll pick up Bata. Yes, Sanjeev, this is all compression in Bata, full of compression. So here we have one SR line where we can look for possible levels of actions, and here I have one more SR line, and both SR lines not good. Here I don't attempt because this whole zone is compressed from here till here. Okay, no, it's literally tough to fight such levels. It will cheat you a lot. Remember, volatility almost went to 70. Okay, so Sudipta says last week sales bank there was a spike. No, every rally is not a spike, my friend. Spike only is valid near a zone. Please remember that point. Don't think every momentum has a probable spike. That has no meaning. That is one. That is one. This is one. Okay. All right. Cool. So anyway, you guys try to put one chart. Okay. Now homework for this weekend is for Friday evening is the review. You have 5 days time, friends. By that time, do me one favor, draw one FTR, one cap, one swap, one compression. That's it. And liquidity spike. So 5 items, try to find one chart. There are 50 plus people. We'll have 200 charts to review this Friday, and we'll go deeper into all of them on Friday. That will be an amazing learning for one and all. Okay. So any more charts, if you wish to see, buzz me. I will have a look at it and comment. Okay. And in next 1 hour, 2 hours, all these videos would be uploaded in the Nishvid website. And kindly note, we will also upload the remaining part of the Super 25 videos there. So I hope every one of you have access to Super 25 also. Please have a look at it. If it's not there, buzz Rashmi tomorrow morning. Which is a continuous pattern with one engulf, and we finished the second power pattern, which is also a continuation pattern, caps, where the journey is capped. So what is a cap? So friends, can you give me a check if you can hear me? Can you type yes, friends? Okay, thank you. So what is a cap? Someone says bottle cap. Very good. Okay. Why should something be capped? Caps are reversal patterns in advanced price action, while flag limit and FTR are continuation patterns. When price makes a rally with strong momentum, definitely many people will book profits. That's natural, right? Some people will make profit. They want to book profit because they don't want to lose their profits. Okay. Because of that profit booking, price will retrace. That is a general phenomenon. Price will often flag at the top of the pole because the institutions either they create long positions to take the price further up, or they create short positions to bring down the price. Now, how many of you recollect the conversation we had in the first module during the equity investment module? We spoke about Wyckoff theory, the concept of accumulation, markup, distribution, markdown. Correct? If you remember, we always said after a significant markup, and if there is a consolidation, we cannot call it as a distribution because there is no guarantee that the price will fall. It can also be reaccumulation. Everyone agree? So this is one important aspect which we discussed. So and what did we say? We said that after the price falls or goes up, then only we know if it is a distribution or a reaccumulation. We will never know that in advance. Remember that point for now. The flag is generally a way for institutions to keep pushing the retail traders to buy so that the institutions can sell later. If the institutions force the retail traders to buy, what would happen? They will get more filling. They can do more shorting. They can have more filling, because of which they can make more profits. Finally, the price falls and cheats retailers. It's always true that a picture is worth 1,000 words. I know this is all English. No worries. In the subsequent slides, you will understand the phenomenon. Now, friends, look at this example. Okay, let me ask you a simple question. Now, this is a price has rallied till here. It had made from sideways movement and it has rallied up. This is some time frame. If I go to a higher time frame, what will you see? Don't you see a rally base rally if you go to a higher time frame? This whole thing, whatever movement, would reflect as a rally base rally, correct? When you blend all the candles, absolutely. That is point number one. Now, the institutions have taken the price up. Now, the price is getting consolidated here, correct? It is trading between a channel. Now, can you tell me, if I assume this as markup, is this distribution? Is that distribution? Majority says we don't know. Yes, it can be accumulation also. It cannot be accumulation, it can be reaccumulation. From here, price can go up or price can come down also. How do you know? Okay, now when this consolidation is happening, okay, let's see what happens next. It seems that they were piling up short orders, correct? The institutions were piling up short orders. So what does it mean? What is that? That was a distribution, correct? It was absolute distribution. Now, can I ask you something? If I go to a higher time frame, will it not look like a simple rally based drop? If you go to a higher time frame, it is just a RBD, rally base drop, correct? Okay, thank you. Now, if you look at it, when you see the price here, okay, can you notice that this whole price created something like a cap? What is a cap? Something like, is it not, friends? Does it not look like a cap of a bottle? The whole congestion area on a higher time frame, it looks like the whole region. If you draw a beautiful bottle like this, it will look like a cap. Now, I want everyone to notice this important aspect. Can you see a small zone here? What kind of a zone is that? It is a rally base rally. Perfect. But what kind of a zone? Muthu gave me the answer. It is an authentic zone. It is an authentic zone. So Manish says go left side. Here there is nothing in this example. It's all blank. So is it authentic zone now? With whatever information we have, okay, it's an authentic zone. Now, can you see that authentic zone was engulfed by this guy? Right? Okay. So let me move further. Now I am going to make this. This is my cap. Why I call this as a cap? Because it looks like a cap of a bottle. Where is the bottle? Bottle is here. Okay? The overall structure looks like a bottle for me. That is why we call it as a cap. Now, this is a zone. Correct? This is an authentic zone. Okay? Now the authentic zone has been engulfed. Everyone get that? Then authentic zone has been engulfed. Okay, let me show you something interesting. What is this? It's an FTR. Okay, very nice. Thank you. Now, there is a simple story here. Whenever price engulfs an authentic zone, a reversal structure is formed. And that structure is called as a cap. The story is this. There is a rally, base, rally, base, and drop. Not only that, the previous rally base rally is an authentic zone. When that authentic zone is engulfed, what does that mean? Generally, we know authentic zones are good zones. So the point is, if an authentic zone is engulfed, the zone that is engulfing the authentic zone is a powerful zone. That is called as a reversal trading strategy. And next time price comes into the zone, I'll take a long short trade so that I'll get my reaction. In scenarios like this, you can take this as the target. Why target? People who want to play higher target, why this is a target? Because that is an FTR, opposite zone. When you take a short here, stop loss is here, target is here. So it is almost like one. Is this too big? Yeah, 1, 2, 3, roughly 1:4 to 1:5 return. Somebody says this can be a failed FTR also. Now, where did it fail? The FTR worked. See, it reacted. I don't know if it gives 1:3. That's a different thing. FTR target is almost here. Okay, now let me summarize whatever we learned. The simple rules for caps or the reversal strategy is very, very simple. We need to have an authentic demand or supply zone, bare minimum requirement. Okay, a rally based drop or a drop based rally is formed. Then the authentic zone should be broken. At that point of time, we look forward for a cap. Let me draw it in a structural way for you. Okay. It's very simple, friends. What is this? It's a flag limit. Thank you. What is this? It's an FTR. Thank you. What is this? It is a cap, because this is an authentic zone. Authentic zone formed. Okay, how did it form? Rally, base, rally, and after that, rally, base, drop, authentic zone engulfed. Therefore, this is a cap. Next time, if price goes there, I am going to look for a short trade here. Short trade, stop loss. Where can I have my target for this? My target can be this. Why? It is an opposite FTR. Opposite FTR can bounce, right? It's a demand zone. Did you understand it? I have put all the patterns here. This is a flag limit. This is an FTR. This is a cap. Correct? Okay. Now let me redraw everything. Price is going up. What is this? What is this? It's an authentic zone. So what is the total thing? Rally, base, drop, and authentic zone is engulfed. So this is a cap. So therefore, if price goes into the zone, I get a reverse trade. Now, what are the rules of the game? Rule number 1, an authentic zone is formed. Rule number 2, rally after rally base rally, which is the authentic zone, rally base drop, the reversal structure is formed. Rule number 3, authentic zone is engulfed. And step 4, trade on reversal. Now don't always think that cap always forms at lifetime high. That is wrong. Everyone get that? What's the difference between these two? Okay, So in this example, if you see friends, here if you go to the left, it is touching a momentum. So this is 100% authentic zone, and this is not even lifetime high. So a cap can happen anywhere. Correct, Sudipta. Is the concept simple? Is there rocket science? Nothing. Number one, I want an authentic zone. Number two, rally based drop. Number three, authentic zone should be broken. Number four, cap, trade at cap. That's all. Brilliant question. Manish is asking Ashok that authentic zone which cap now. The way flag limit has three scenarios, three cases. The FTR has four cases. A cap has two cases. Again, two kinds. This is some demand zone. Why? It's a drop base rally. What is this, friends? It is an authentic zone. Why? Because you go to the left, it is hitting a momentum candle and not a base candle, which is another zone. Brilliant. Now what happened? Price went up, formed a base and started falling. While falling, it broke the authentic zone. The moment this authentic zone is broken, the cap is created. So next time price goes back to the cap, I look forward for a shorting trade with a stop loss above the distal line and expect the price to retrace. Is this scenario simple? Any doubts so far? Any comments, friends? That's a good question. Amit is asking, Ashok, what if the price come and hit the demand zone on very first attempt? In the sense, are you asking like this? Are you asking like this comes, it hits here and then goes up? Then also it is a cap. Because our requirement is this authentic zone should be broken. That is our rule book. It is already broken. Now there is another interesting scenario you need to know. Anatomy of caps case 2. There is a demand zone, drop base rally. Okay. We get an authentic demand zone. It formed the base and price is coming down. Now, while coming towards the authentic zone, price forms another base and breaks the authentic zone. Correct? Authentic zone is broken, so cap is formed. That is as per our rule number 1. We have a good rally base rally, authentic zone, and we have a rally base drop, and finally the authentic zone is broken. So I am sure that the cap is formed. Now, friends, please note, last time price came like this. But this time there is a base formed. What does that mean? When you say base formed, what exactly does it mean? It means price stopped there. It means there was a war. There is a fighting. There is resistance. There is congestion. Now, is that not a good zone? Drop base drop. It is an authentic zone too. Can someone notice that? In this example, it is an authentic zone too. Anyway, now what we call is, once the authentic zone is engulfed, we will, once the authentic zone is engulfed, we'll go reverse. We'll go reverse until we touch the first zone. Is this the first zone to touch? Correct, friends? And then if we go further to the origin of engulf, from where the whole journey started, that is the top, second one. So this is called as the source of engulf. This is called as the origin of engulf. There's a question by Manish. He's asking, Ashok, what if an authentic zone is broken by many bases? Can there be a chance that a zone gets either it has to gap down or it has to create a momentum? No, are you telling it will come like this? Like this? If it come like this, that is called compression. That's again a different concept. Okay. Now, so this point is called as the source of engulf, and this is called as the origin of engulf. What is source of engulf means? Let's say this is a big army. Okay, this army is moving. They have come to fight these people. That army is coming to fight this army on the lower side. This is their home. But while coming, they had a fight with some people here, and finally went and fought this zone, destroyed this zone. Okay, so this is called as the source of engulf. How to identify the source of engulf? Simple. After the zone is engulfed, from there go reverse. Wherever a base formed, wherever a zone, the first zone is source of engulf, and the zone from where everything started is called as the origin of engulf. It takes little time to understand, but next time price goes, it can react from source of engulf. It can also react from origin of engulf. Both trades you can take, but it is case by case. Sometimes what happens, the source of engulf and origin of engulf looks like level over level. They will be sandwiched. They will be jam packed. In such scenarios, we directly trade at the origin of engulf. Is that clear? Any questions till now? Still a little confusing. Can you give example? Yes, we will go to examples. We'll go to examples. Okay, all right. Now let's go. Here is the first example. Okay. Before I go, I will redraw both the scenarios for you, so that you will understand both case 1, case 2. Okay, friends. All right. Now let me draw this, friends. Okay, I'm just writing it. That's why I was not audible. Now let me go and mark the numbers. Step 1, authentic zone formed. Step 1, authentic zone formed. Step 2, rally based drop. Step 3, authentic zone engulfed. Step 4, trade on reversal. Step 1, authentic zone formed. Step 2, rally based drop. Step 3, authentic zone engulfed. Step 4, trade on reversal. Now, if you ask me how this will open up for me, this can react from here as a trade. Here, the price can react like this. It can also react like this. Now, I want every one of you to understand both the scenarios completely. Now, friends, tell me, there is no source of engulf in the second case, which means this is both origin of engulf and source of engulf for this, correct? What is the role of source of engulf? How do you find them? All we said is once the zone, authentic zone is engulfed, go reverse and mark the first zone. That is the first zone that has come, which means the army just walked in. They directly came and fought the enemy fort. In second case, the army stopped somewhere in between, took another major fight, and then came into the authentic zone level. Is that clear, friends? Is this example clear? Recollect the 4 rules of the game. Very, very simple. Rule number 1, we need an authentic zone. Rule number 2, we need a reversal structure. What is a reversal structure? It is a rally based drop in case of supply side. It is a drop based rally in case of demand side. Can there be more than one SOE? No. There is always one SOE, that is source of engulf. The first zone which engulf this particular authentic zone, but there can be many zones, but source of engulf is always one. You can demand story again. This is a shorting side of the story. Do you want me to mark the buying side also? Okay. Let me mark it for you. This is an authentic zone. Okay. Now this is a cap. Why? Authentic zone is engulfed. What is this, friends? It is source of engulf. And this one is a cap by structure, but that location is called as origin of engulf. So what I will do, I will take some other color. Next time price comes here into this zone, I take a trade. This is entry, long trade, stop loss, target. Here, if price comes here, I'll take a trade. Next time it comes here, I'll again take a trade. Yes, Manish. Everyone understood? Why do you think this cap is powerful now? Why should we consider this cap as a power pattern? It is because it has engulfed the authentic zone. It has engulfed the authentic zone. Authentic zone is a strong zone. If somebody has broken such a zone, they are more stronger. That is the essence of this conversation. Case 2 can also be an FTR. No. If it's an FTR, show me the double engulf and the trend direction. You can do that. Oh, are you talking about this one by any chance? I'll mark it for you. Are you saying this one? L1, L2. You can do that. If you find a pattern, go for it. Yes, that is valid. Pretty valid. It's pretty valid. Okay. Now come to this beautiful example. Is this an SR line? It is lifetime high. Correct? Now, can you notice this authentic zone? Rally, base, rally. How did I mark that? It is the last powerful demand zone before the inevitable reversal. I repeat, it is the last demand zone. Okay, now this is the last authentic zone. Can I take this also as an authentic zone? Rally, base, drop, drop, base. Can I take this also an authentic zone, right? Can I take it? I cannot take it. You should take the last authentic zone before the reversal. That is the key point. This is the last authentic zone close to the reversal. Now when I mark, who broke this authentic zone? Which candle broke this authentic zone? This guy. Correct? Everyone agree? The bearish momentum guy broke. So what will I do? Once it is broken, I will go reverse and stop the cursor at a place where there is a first zone. This drop to base drop is the first zone, and that is my source of engulf. And then I go to the topmost point of the zone, which is my origin of engulf. Now everyone get the both source of engulf and origin of engulf, how to find it? Once the candle is engulfed, the authentic zone is engulfed, go reverse on the on the opposite direction and locate a point. Locate the first zone, that is your source of engulf. Now let me draw something interesting for you. Okay, let me draw very interesting, and I want your participation. Now in this case, friends, just to give you a clarification, this is an authentic zone. Which is the source of engulf and origin of engulf? 1, 2, 3, 4. Which is the source of engulf? One is origin of engulf, everyone knows that, and that is a zone of cap. Okay, the source of engulf is 4 because that is the zone from where the recent army came. Okay, remember that point. Okay, I will throw another challenge. Hmm. I'll make it simple. Now, which is my authentic zone? One, two, three. Which is my authentic zone? 3 is my authentic zone because that is the last demand, after which we saw an inevitable reversal. Excellent, the latest one. And after that, now which is the source of engulf? This is my source of engulf. This is my origin of engulf. It's not that complex, no? Everyone clear, friends? Great, sounds good. Now look at this example. Where is our trade? Our trade can either be here or it can trade like this also. Now, since the origin of engulf and source of engulf is very close, what we can do, we can take the entry at origin of engulf itself in this case. Why? The both are jam packed. It's like, it looks like level over level. So there's every chance for price to break this and go to this point. Everyone agree? Is this example clear? Everyone understood? Where are the points? Rule number 1, authentic zone formed. Rule number 2, reversal structure formed. Rule number 3, authentic zone broken. Rule number 4, trade on reaction. Okay, let me take another example. Now look at this scenario. Okay, this is a rally base drop. This is the last zone. Okay, this is the last zone. After that, price reverse. There is no rally base and drop. So if you go on a lower time frame, you can see rally base and then drop. Higher time frame, you don't see. I am sure everyone are aware of that. Then where are the rules? Rule number 1, authentic zone created. Rule number 2, reversal structure. Rule number 3, authentic zone engulfed. Did the engulf happen? Who engulfed it? Which candle? If you ask me personally, the guy who actually engulfed this candle is this guy. The other two just broke the low, that's all, but they didn't close below. That is why this becomes the source of engulf, this drop base drop, and this becomes the origin of engulf. Friends, is this sensible? What if price make a reversal from in the way to reach SOE? Let it reach. Who stops it? See, first of all, see the trade has almost this kiss trading happened here at source of engulf already. How many of you notice this? How many of you notice that this is just kiss tested happened? The only thing that's pending here is origin of engulf only. Is this example clear? Now look at this example. This guy is Mahanagar Gas. Okay, I marked it recently. It framed a brilliant cap. Look at this. The last demand, rally base rally, which is the authentic zone. Then beautiful rally base drop, which is the reversal. Authentic zone by engulf this guy. So this becomes our origin of engulf and source of engulf. See how beautifully this trade worked. It's a cap. There is no need of an SR line here. In this battle, there is no SR line. In caps, what do we want? First thing is we want an authentic zone. Rally, base, rally. That's all. And then rally, base, drop. And then authentic zone should be engulfed. The engulf happened here. The moment this scenario came, we concluded to take a trade here. And price came inside the cap zone and reacted. Okay, there is no need for it. What is the structure? This is case one. Price rallying, authentic zone, zoomed up, price sideways, broke it. So reversal trade here, reaction. Case one. This is a classic example of case one. Okay. Now look at this example. This guy is United Breweries. Okay, now look at this, friends. This is a rally base rally. Okay, and this is also rally base rally. Why can't I take this as authentic zone, friends? Okay, assuming there is nothing here, forget about what is there here. Assume it is all lifetime high. Why I can't take this and why I have to take only this? Because this is not latest. Brilliant. Okay, so that is my authentic zone. Step number one, authentic zone. Step number two, rally and drop. So that is a reversal structure, which is step number two. Not only that, this candidate broke the authentic zone. So if you ask me personally, which is the source of engulf, can somebody see it? The actual guy who broke authentic zone is this guy. If you go reverse from here, you see this guy as your source of engulf, correct? How many of you agree this is the source of engulf? Can you give me a check if you understand that? I'm repeating again and again. And the top guy is your origin of engulf. That's all. Okay, good. Now, what happened after that? The price luckily came exactly inside the cap zone and gave phenomenal response. Let me take this straight line, friends. Friends, can I trade this zone? What is this? It's a flag, but it's a very bad flag. Why it's a very bad flag? It's a very bad flag because this whole thing is all basis. What will you trade? It's all faking. So Narsimha is asking, sir, what is latest authentic zone? I don't understand. Okay, one last time I'll write on the chart. Narsimha, what is this? All are authentic zones. Now, all are authentic zones. Okay, you agree? Now, price has only broken this authentic zone. So, price has not broken this, not broken this, not even broken this. Is this a cap? It is a cap because it has broken the latest authentic zone, the latest authentic zone. You get that? It has to break latest authentic zone. Now, which is the SOE now? Let us see if you guys have really understood. Which is the SOE? Perfect. 3 is SOE, which is origin of engulf. 1 is original of a. What is 2? 2 is just an authentic zone. 2 is just a drop based drop. That's all. Okay, that's very nice. Very nice. Clear. Good job. Look at this example. Okay, this is a rally base gap up rally. Okay, if you go to lower time frame, you get a slightly higher time frame, you will get a proper zone here because of so many bases. It has broken. So where I am waiting for 2431, 2436 levels to break. I am sorry, 293,000 levels. It will come. There nothing is too far in markets. Any number can come anytime. Now tell me something. Why this cap is wrong? Authentic zone is broken. This guy broke it. It is not authentic. That is the reason. Authentic zone itself is wrong. Good. Okay. This is another wrong example. Okay. Now look at this beautiful example. Rally base rally, rally and drop. A classic pattern. Where to find? Rally, base, rally, which is your authentic zone. And then rally and drop. It engulfed authentic zone. Where is the SOE here? Where is the source of engulf? The source of engulf, origin of engulf is both the same. It is the same damn point. So this is the numbers we gave. I guess this trade has worked. This is Page Industries. Look at this. Drop, base, rally, authentic zone, engulfed by this guy. The whole last base is this, which is SOE and OOE. That is the math. Okay. Now look at this beautiful guy. Okay. This is a smart trade. This is basically a Quasimodo trade. Okay. One of the beautiful patterns. We'll talk about this probably next week. Yeah. We'll talk about this next week. This is one favorite trade which I marked it. I wanted to trade this level. It's one of the beautiful zone to trade. Okay. Now look at this trade. Okay, this is the last base, authentic zone, rally base drop, gap up and then drop. Okay, and this is the cap that we wish to trade. Okay. What is this? That's a flag limit. Very nice. Gaps around 2000 and 32,000. Let me take a look at the chart. $32,000. Are you talking about this gap? PO? So PO, the point is it is definitely a good gap, but the point is we are more worried at the latest demand zone. Friends, tell me why we are worried at the latest demand zone. Why we are worried at the latest demand zone? The latest demand zone is the zone where the opponents took complete control. They dominated. That is a point of change in domination, no? That is the latest point where buyers finished their monarchy. The buyers finished their dominance. All the buyers were consumed at that level. Okay. Now look at this beautiful example. This I marked recently. Okay, this is a beautiful authentic zone, rally based drop. 100% authentic zone. And then rally base, rally base rally base rally is the authentic zone, and then rally base drop is the formal drop. Okay, and if you notice very closely, the authentic zone is broken by this candle. So the source of engulf is, okay, to be honest friends, this will be your source of engulf. That is why see this guy reacted from here. How many of you notice The green candle is the source of engulf. You know how it is. I'll mark it for you. See this, you know how it went off. It went like this. Authentic zone went off, came down, okay, and then went up and came down. This is my source of engulf. Why? If you go on a lower time frame, it will look like this. Okay, and look at this. The reason why I love this is this one. Oh God. See, if it comes in same level, dream to short this guy with target here. I will dream. It's a good trade. How many of you loved it? It's a classic pattern. Your case one, nothing but case one. Rally, base, drop. Okay. And then kaboom. So if this kind of compression continues, it will be phenomenal tomorrow. Okay. So okay, I got a new name for it. Our our buddy Raja says it's a coiled race. That is called as compression, and we are spending almost one session discussing this concept. Yes, thank you. So how to improve RR? See friends, to improve RR, you have only two options. One is your either reduce your risk or extend your target. What do you want to do? Friends, you have two options to improve your trade, RR in the trade. Either you can reduce the risk or increase the target. Which is the best solution for you? Wow, everybody says reduce risk. Awesome. We must never trade for an RR less than 1:3 in positional trading. This is mandatory, 100% rule. Second, we must never trade an RR less than 1:2 in intraday trading. These two are thumb rules. Now, you can improve your RR by two ways. Number one, reduce the risk. Number two is extend your target. By reducing the risk, what all benefits? Number one, it's a very safe method. Okay, you just have to go to lower time frame to get cleaner, untested, fresh zones as price structures. And there's only one problem with this story. There is a high possibility of you not getting a trade, which is fine. When I have hundreds of trade to take up in the days to come, I don't mind. Okay, so it's a part and parcel of the journey. The second story is extending the target. It's not a safe method because price may retrace from your from profits zone. You can go back to losing zone. In the sense, it may retrace back and even break your stop loss without hitting the target, which is the biggest pain. Seeing the transformation of a winning trade into a losing trade is a nightmare. And you have no problem. You always get your filling. So I personally believe reducing the risk is the best method. We will extensively show you how to reduce risk and go to minimum 1:5 RR in the subsequent trades. Okay, and there's an exclusive session on this RR enhancement theory. We will go deeper and we will teach every micro aspect there. So what all did we learn today? The third most powerful price action, What is the difference between caps and the two partners, FTR and flag limit? The fundamental difference. This is a reversal strategy. That was a trend continuation strategy. Okay. Now, not only that, in those patterns, you are engulfing an SR line. Here, you are looking forward to engulf an authentic zone. Perfect. Very good. And you remember the two kinds of cap formation? A normal standard case 1 and the second case 2 is with source of engulf and origin of engulf. Perfect. The second type of cap will have two zones. And you can trade any zone. If the zones are sandwiched, if they are very close, directly trade at the origin of engulf. The target for the cap shall be the opposite demand zone. It can be anything. Okay. Going forward in live examples, I'll start showing you how to pick up targets which can be opposite power pattern. It will take little time. My point is, I want every one of you to start identifying these flag limits, caps, and FTRs easily. The moment you reach that level, we can slowly move to the next level of identifying opposite zones. Okay. So any questions? With this, we come to the end of the session. So let me take up some questions. Okay, there's an interesting question. Sir, how to find trades? See, there are two things. If you are an intraday trader, you need to identify 10 high beta stocks and you need to mark all your levels, mark all your power patterns and start watching it. That's all. Okay, you don't trade many, but if you are trading a positional price action thing, there are hardly 140, 150 F&O stocks. You just have to mark them once. Remember once, if you mark a monthly chart in a particular script, it will take 6 months for the things to change. If you mark weekly, it will take 3 months. If you mark daily chart, it will take at least 1 month for your chart to make changes. Okay, and slowly, if you ask me personally, there was a time I used to mark all 150 charts. Okay. Yes, PO, that is perfect. Okay. So now please let's finish off the whole learning of the entire story, and then in our weekly review session we will take up all the other flavors. Okay. The purpose of those sessions is just to review all the charts, try to evolve and practice more. All right. Now let me go to Bank Nifty. Okay, so I'll just simply take a level. Okay, this is engulf, no change. This is engulf, no change. This one is engulfed, price went up, came down, formed a base and went up. This slightly looks like a FTR, but I will not buy it because there is an instant base. Okay, this could have been a very good FTR trade, but friends, if you look at it, this particular zone, right, it's already tested here. So no point. Okay, though this trade worked, but definitely we would not have taken this trade. We don't trade tested zones, we don't trade 2TBs. Okay, now so I'm going to remove this zone because this zone we are not trading. Okay, ultimately what I'm going to do is just change and move my candle to wherever there is an engulf. That's it. Okay, and let me look at this engulf. Any change there? Huge base and then a gap. Hmm. I don't know how to extend this. Where is extend? Coordinate, visibility. Is there a way? Coordinates, end to end. Okay. I don't know how to mark it. So let me go to daily chart only. Okay. So what is happening with Bank Nifty? Look at it. Price is fighting hell, like hell at this zone. This is a zone of break or no break. There is no price structure. This is all manipulation zone. How many of you get it? This entire zone is all compression, no? Do you guys find something here? Okay, it's all full of compression, no? If you personally ask me, let me remove all drawings. The only zone of action you have in Bank Nifty is this, if you ask me personally. Okay, wow, that's the best zone of line action. Okay, this is where you have some action coming up. This is the zone, 25,000, 26,000 level. After, within that, I have nothing to fight here. And this is an SR line which has already been tested. See, this was it's like this, up, came down, resistance, 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 resistance. But where do I trade? I don't have proper level to play. Okay, so that is why we will wait. This is the only strong zone where we can fight. If you look at overall view of market, and friends, I'm still bearish on markets. I am not yet bullish. There's a long way to go. Vilas is asking, can you stick Hindustan Unilever? Hindustan Unilever. Okay, so this is an SR line broken. This is an SR line broken. See, this zone is playing now. This particular zone. Okay, match in sync with this SR. Okay, we cannot trade there because this is all compression. This is all compression. Very confusion, highly manipulated. Okay. I'm sorry, it has become little slow. That's why the chart is freezing. All right. Anyway, so friends, now I have a simple request to everyone. I want every one of you just post one chart, just one chart. Okay, I'm not asking more because we have more people. Okay, more than 50 people there. Everyone put one chart. Now post me one chart of FTR, one great chart of cap. That's all. With screenshot, with markings, with clear levels. That is what I want. If you're able to mark it, then the coming Friday review meeting will have amazing interaction and there'll be a lot of things that comes up.